Welcome everyone to another live stream. I hope you're doing well. Hope you had a good weekend, got some rest, maybe you're on vacation. I'm grinding it out here in the trenches, so I'm probably gonna take a vacation in September. That's the plan for now, which is not really such a great idea because if you look at the markets, usually August is pretty slow, and then things start to heat up in September as most big players, hedge funds, managers, bank managers, they come back to the office and they start putting on new ideas for the Q4. So Q4 usually, I would say Q1 and Q4 tend to be the most volatile of the year, because in Q1 you kind of have a fresh new year. All of the big money, all of the big PMs, they are looking at new trade ideas for that year, while in Q4 everyone tries to squeeze out that last cent of performance. You have the Santa rally, so I think stocks love Q4, which we can of course verify on the Edge Finder seasonality. So let's take a look at the seasonality monthly. Let's see that. Yeah, you can see, so for the SPY, November tends to be the best month of the year. October tends to be really good. December, not so much. But just that Santa rally in November and sometimes in December is a great occurrence. So in September, usually people come back to the office. You can see September tends to be negative for stocks, but they do come back into the office and they start asking themselves, okay, I had my vacation, I've reset, I have a fresh mind, I have a fresh perspective. What can I put on? So what kind of a trade idea can I put on for October, November, and December? That's usually what happens. So even though I'm planning a vacation of like a week, I'll still most likely will be monitoring the charts, because again, the market never sleeps, and missing a opportunity, missing a big month, well, it could be detrimental for your year-end performance, especially if you're like young. If you're like 50 years old, then you probably don't care anymore. But if you're 20 something like me, you're probably trying to squeeze out the most that you can with a sort of a fresh perspective, fresh mind. So that was a bit of an opening rant for this August of 2026. The next rant is going to be, I'm looking at the market and I'm asking myself, what trade can I put on in this week? To do that, we have to look at the Forex Factory calendar. If you watched the live stream last week, you would know that I was talking about the NFP print. So the NFP, it came in much lower than expected. The unemployment rate came in actually better. So it was a weird NFP. It was a weird NFP. Even though it was negative and much lower than the forecast, the unemployment rate ticked lower. So you have contradicting evidence. You have this number telling you that the jobs market is contracting, and then you have the unemployment rate telling you that the employment could be improving a little bit. So contradictory forces, I would say. That was for the rate and the change. That was an event that I wanted to see pass. Okay, so if you look at the DXY, our dollar index, what did the DXY do? This was on Friday, yes. So what happened on Friday? It went down. So it was not a huge red candle, but a substantial red candle, I would say. Personally, my game plan would be to look for sell setups on the US dollar. That's what I personally want to play. I think the CPI prints, well, the CPI could print a bit hot. So this week on Wednesday, we have the CPI print, but that's not really what I'm betting on. I'm betting on the Fed event in September. So if we go to the Fed watch tool and we look at September, the market is still pricing in a 43.9% chance of a hike. Okay. So I would say this chance is close to zero. 2-3%, maybe 5%, but very, very low. So a repricing is needed, in my opinion. That sort of a repricing means you sell dollars. So you sell the DXY, or you sell some sort of a currency pair connected with the US dollar. And that is the trade that I'm looking to play. So it may seem a bit far out. Today is the 10th of August, and placing a bearish dollar position for the 16th of September is pretty far out. It's more than a month, but that's currently what I have, what I have in my mind. That does seem to be a good trade, because there should be a repricing. Okay, there should be a repricing for the Fed. Also, just give me 1 second. I'm gonna go grab a glass of water, and I'll be back in a sec. Okay. So that's how the markets work, basically, or that's how trading works. You try and gather the baseline. So the baseline here is 43.9% chance of a hike in September. That's the base case. That is what the market is thinking. The market has a hive mind. You as a trader, you need to have a different opinion, and you need to have an opinion that says this is wrong. And my opinion is, I would say, okay, let's give it a 10% chance of a hike in September. That's what I think right there. Now, the reason why I think that is because if you watched the previous Fed meeting, you would know that Warsh basically was super dovish. Although he talks big about lowering inflation, he talks big about the inflation being way above target. But when it comes to actions, the actions are telling you that the Fed as a whole is going to be super dovish. And if you look at the last time when they started to hike interest rates, inflation was, I think, 7%. So I guess the only way for the Fed to actually hike rates would be if inflation goes above 6 or 7%. I'm no longer going to do the 6-7 joke because I got tired of it. But yeah, so if inflation goes above 6%, 7%, then yeah, we may actually get a rate hike. But with the current inflation data, I would say inflation, a rate hike is not going to happen with the current Fed. The Fed is staying much more dovish than people expect. And the current inflation is 3.5%. That's nothing. Even if we do get a hot print, even if we do get a hot CPI, okay? So CPI, this is what I'm looking at, CPI year on year. Previous number 3.5, actual or forecast is 3.4. Do we have Polymarket CPI? What is this, August 2020? No, let's do July 2026. Let's just compare. This is for the core. Which one has more volume? Well, this one actually has more volume. This one has a bunch of volume. So this is July inflation, and it closes on August 12th. So this is what we need. $454,000 in volume. That's fine. So the highest chance is for 3.3%, which is actually even lower than what I see here. So the forecast from Bloomberg and Reuters, I'm guessing, is 3.4%. And then 38% chance for 3.4%, 17% chance of 3.5%. looks like inflation will come in possibly lower than expected. Okay. Yeah. So I would say maybe even selling the dollar ahead of the inflation print should be good. Could be a good position. Could be a good trade. I mean, definitely with these odds, the rule is Polymarket is usually more accurate than the forecast from Bloomberg, Reuters, the one you basically find on the Forex Factory calendar. So Polymarket is more accurate. Anyway, just to finish my thought, the market is saying that we may get a hike in September. I'm saying that it's not going to happen. So what can I do? I can position myself short on the dollar. I'm still looking for a currency pair to do that. In order to be short on the dollar, I need to find the currency pair that I believe is strong at the moment. So maybe the Aussie. I don't like the New Zealand. Let me see Aussie NZD. Okay, let me check the top setups. What do we have with top setups? Do we have anything that can work for me? GBUSD, Euro dollar, Aussie dollar. Okay, it looks fine. Aussie dollar, not a bad candidate. So buying Aussie dollar should actually work pretty well. GU, I'm not so sure I want to do GU because it has been so flat, while the Aussie dollar has been recently on a path to the upside. So this could be a fine trade idea. Buy the Aussie dollar going into the CPI print, while also betting not just on the CPI, but betting on a dovish Fed, another dovish Fed in September. Now, you may ask, so if the CPI comes in lower than expected, it means basically that inflation is lower than expected. It means that the Fed can afford to be more dovish, and dovish is bearish for the US dollar. So that's a trade right there. I like it. I like it a lot. If you want to get notified when I take this position, you can get access to all of my trades in the A1 Trading Discord. Now, if you want to join the A1 Trading Discord, you can join for free. The link to join for free is in the description, and I will also post it in the comments. Give me 1 second. So let's go to stream links, free Discord. Okay, so in the comments, you will find the link as well to join the free Discord. So you can join for free, or you can become a paid member, and you can use the code Marco for 15% off. And the code, by the way, also works for the Edge Finder. So if you want to join our community, if you want to get access to all of our positions, all of our knowledge, plus a chat with other successful traders, do use the code Marco. All of the links, all of the information is in the description, or you can just go to the A1 Trading website. Okay? Right, A1 Trading website. So, what else did I want to say? Just another example of how a trader should think and how you can actually make money in the markets, or how basically professionals make money in the markets. SpaceX. Let me show you SpaceX. So SpaceX, this was a trade idea or a trade signal in the A1 Trading Discord. I took 1.6% winner, but basically, what was the idea here? So the idea was SpaceX, really popular company, all over the news, all over Bloomberg. Now, on the 6th of August, there was the first lockup expiration. So the first big bag holders are able to sell, or were able to sell, on the 6th of August. So the story in the markets, or the story in the news, was because the first lockup is expiring, you will get a big crash lower. You will get a big crash lower because there's going to be a huge amount of supply. But that was the general thinking of the markets. Lockup expiration will lead to massive supply and price drop. That was the general consensus. What I was thinking, which I got from Brent Donnelly, so I got it from his analysis, what professional traders were thinking, this whole move was priced in way before the 6th of August. This whole move got priced in right there, okay, during the drop, because a lot of the big bag holders that couldn't sell probably hedged or took loans against their positions way before the lockup, okay? So the market, because the market is smart, the market priced in the lockup expiration, which means that when the lockup expiration actually happened, you got a relief rally. So all of the selling that the general market thought was going to happen on the 6th of August already happened weeks before that or days before that, going into the event. So it's only logical that after the event, you will get a relief rally, right? So this was the general market consensus. And my consensus was relief rally, because the market already priced in the lockup expiration. So that was my consensus, or that was my thinking. And of course, my win rate is only around 50%, so I'm not going to be right every single time. But basically, a relief rally did happen. See? So everyone in the retail thought the price was going to crash on the 6th of August because of the massive supply. But professionals knew that a lot of the people that hedged their exposure took off the hedge, and there was a relief rally as people started noticing that no, the price won't crash on the 6th of August. So the exact opposite started to happen. And that was the trade. Just a quick in, quick out. I'm out of this position, no longer holding it, because I didn't want to have a long-term position on SpaceX. The company is unprofitable. You do have more lockup expirations coming out in the next 12 months. So you should see more general downside on SpaceX. The overall trend should be lower. I was just betting on a quick relief rally. Okay, so that's what I wanted to basically share with you. That's trading. You have a general market consensus. And then you have your own view. Now, if your own view differs from the general market consensus, then you can place a position. Okay, if you have good evidence to do the opposite of the general market consensus, then you have a trade. So I hope that helps. I hope it's much more, let's say, logical than just buying lines on the chart and buying candlestick patterns. I know it can be profitable as well, but for me personally, it makes much more sense to buy or sell something that I actually have an understanding of what's going on in the background and what's my edge. If I don't know what my edge is, then it's going to be tough to add on to put on size on the position. I may risk like 0.1%, which is nothing. That's not going to move the needle. You need 0.5%, 1% risk, 1.5% in specific cases to really move the needle as a swing trader. As a scalper, it's different. I'm talking about my approach, which is swing trading. As far as my trades at the moment go, I'm short Swiss yen. I took 60% off already. I have 30% running. This is more of a longer term position, a longer term bet on a bullish yen. So we'll see how this thing develops. And I'm basically looking to do something with the dollar. Now, I do like the Aussie dollar, so I'm going to put it here. And I do like gold, which I know you guys love as well. For the Aussie dollar, I will probably take a buy position before the CPI print. That's the current game plan. So again, the market is pricing in a potential, or it's pricing in a chance of a rate hike. I'm saying it's not going to happen. So what can I do? I can sell the US dollar against the Aussie, because the Aussie seems to be doing fine. And do we have a central bank? We do. Okay, I should definitely wait before I execute my position. I should definitely wait to see the RBA. So this is the Central Bank of Australia. Trading into that without having a clear edge is not the smartest way to go. So it's better to see that pass, to see that be behind us, and then I can do something. Now, gold is on the list as well. I do want to get in, and buying gold actually goes pretty well with my thesis of a dovish Fed. Okay, so my thesis of a dovish Fed, of a weaker US dollar, you can do that trade. You don't have to buy Aussie dollar. You can actually buy gold. Now, in my opinion, gold does seem a bit overextended. And let's run it through the top setups. What do we have? Gold, very bullish. Okay, that's nice. So a bit of a pullback would be good. Okay, a bit of a pullback, a bit of a correction should be a good entry level, right? Now I don't want to buy this top because the price seems overextended, but I'm looking for buy setups. Yeah, and again, it's a good bet on my thinking. It's a good bet on a dovish Fed. So it's on the watch list. And the rest of the list, oil is up on the day. So looks like the developments in the Middle East are not progressing well. Let me see the Hormuz traffic. So if you go to Port Watch IMF, you will see how many ships are actually passing through. What is the trade volume? The last update was August 2nd, and it's still nothing. Yeah, just nothing. Just nothing. So the strait is still very clearly closed. Now, I don't know what will happen. I have no idea what's going to happen with the strait. I have no edge in predicting that. We can look at poly market. So we can look at, let's open up a new window, Middle East. We can see what the market is betting. Or let's go to Strait of Hormuz. Was 16 million in volume. That's a lot. Let's see. How many ships transit through the strait? This is quite a lot of volume as well. So by August 16th, the market is saying 25 to 49 ships transit the strait. I would say it's lower actually than that. Anyway, this is not going to help me much. I think the whole Middle East situation is so freaking unpredictable that I'm just excluding it from the equation, and I'm just betting on a dovish Fed. That's kind of how I'm approaching the situation. Let me run through the comments. Let me see what you guys are saying. So good morning to everyone. Happy Monday. You can catch me. So my stream is going to end in 5 minutes, but you can catch me again in like 2 hours. I have a second segment. Gold, Sluggy, welcome. September is very fast paced. Marco, I'm getting PTSD from last year, August. Gold, yeah, I know August was pretty hectic. Also, it was hectic on the yen in 2024 when you had the initial intervention. Then you had a surprise rate hike from the Bank of Japan. So August can be active. It definitely can. I'm looking at potential Aussie longs or GA shorts, hoping for a more hawkish RBA. Silver broke out of a range. Swiss cross is setting up good for fifth wave. Good morning, KDX. Marco, maybe check out UJ if you want to sell the dollar. Personally, super long yen, and I also see more downside in DXY, very crowded. Bias for gold. I don't have a super short-term bias. Just long-term, I want to be in. I want to get in on a buy position on gold, but I want to pull back. I want a better price. I think this is overextended, and I think a pullback is needed. A pullback is due. RBA is expected to surprise dovish. Interesting. I'm going to have to look into that. Buying gold and the FTSE, maybe buying pound Swiss is my best setup. I know Aussie CPI was cool, but household inflation, we can take a look. We can take a look at the situation in Australia. So if we look at first the GDP, just the overall trend, AUD. Well, it's positive, so that's good. I don't see a massive issue here. Let's see the CPI. The CPI is falling a bit, which is not bullish for the Aussie. PPI up. So July print is 3.6, previous print 3.0. And then the jobs market. Let's take a look. I'm sorry about that. So unemployment, it looks fine. Yeah, it is elevated on a longer term scale, like Jan 23, 3.58, July 26, 4.4. So it's definitely going up overall. Although, is it in kind of high territory, above 6%? No. So it's not that bad. It looks fine. Actually, now that I go back even more, it looks okay. 4% or 4.4% unemployment is okay. It's a sign of a healthy economy, I would say. So Aussie is a good contender. But yeah, I'm going to have to see what happens at the RBA tomorrow at 6:30 my time. What will those guys say? Yeah, I would like for them to be more hawkish, because it could bring sort of a sustained uptrend, sustained bullish pressure on the Australian dollar. But yeah, other than looking at other currencies, I don't see much. I don't see much potential here. I don't see a currency that is super strong. USD MXN, I don't know if you want to trade these sort of kind of more exotic pairs, you can. Although it's sitting at a crucial level of support. You also, if you're short on USD MXN, you get paid some pretty nice positive swaps, which is an added bonus. Last Aussie CPI missed. Name of the websites again, please. If you're wondering about the Edge Finder, I'm not sure exactly which website you're referring to, but A1 Trading Edge Finder, or you can find the link in the description. You can also find the Discord if you type in A1 Discord, or you can find the link in the description as well. And I want to suggest that you use the code Marco to get 15% off. Okay? So I have one more minute. Let's see. Aussie is wait and see territory for me. Marco, it's not that RBA should turn dovish, but rather less hawkish. Okay, that would be bad as well. CPI this week may give us a pullback we need for USD shorts. I agree with you. They won't hike. I'm expecting cuts. The worst case scenario, they rather hold. Well, I'm not saying they're going to cut, but they are not going to hike. I just don't see a world where they actually hike rates in September or even this year at all. I think this year they just keep the rate the same. So that's about it from me. I will play a quick transition now, and then you'll have James coming on right after. So thank you for watching. You can catch me in my second segment.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. My screen will be there in a second. We're just doing a transition teething period. How are you guys? There we go. We're online. How's everyone doing? Happy Monday. Hope you all enjoyed your weekends. Gold has been very, very interesting last week. So, what's going on? Good afternoon, sir. I am your new subscriber. Hello. Welcome to the stream. KDX, good to see you. Sluggy, good afternoon. And Christoph, good to see you, my friend. Hope you're well. Okay, what does it say? How about Euro US dollar today, bullish or bearish? We can have a look at Euro dollar for sure. As always, I'm here for an hour today, so we can take our time, have a scroll through the market, see what we find, and have a chat. And Tony, Modi, good morning. Duckling, how are you guys doing? Hope you're well. Okay, so yes, as I was saying, gold had a fantastic week last week. I'm sure you guys have all caught up. You know, I made content on it. Nick's made content on it. I'm sure every macro trader has made videos about gold. So we're not going to recap what's going on. However, as you can see, I am long at just around 4,000, and I've got another long entry here at 4,058. So I'm positioned quite well. As I've been telling you, though, these are very small position sizes. These are 0.01. So unfortunately, you know, I'm doing well, but it's not anything significant in terms of P&L, unfortunately. Now, the reason for that is because, again, as I've been saying over the past 1 to 2 weeks, I was in or tried to start a DCA approach on gold, where I was looking to buy every $100 increment lower from 4,000, so 3,900, 3,800, so on and so on. I had pending orders there. Now, of course, that was the idea, that I was betting on gold going lower. I was relatively bullish on the dollar at the time, and I wasn't that optimistic on the Middle East situation. So at this time, I was still fairly confident we could see a little bit of a lower price on gold. Of course, that hasn't happened. So now I'm starting to reconsider what my approach is. So I'm going to leave these two positions. Again, they're small enough for me to not worry about. As long as I manage them, they're fine. So now I am looking for a more short-term position with obviously stop loss, take profit, very standard type of approach here with a swing trade. Now, of course, part of that, or mainly what's going on here, is if we just get rid of the neutral readings just to clear things up, we can see gold here has a very bullish reading of +8. So I think gold is a very simple approach. So as I was saying last week, it did look like we were heading towards these moving averages getting crossed, which is exactly what's happened. So we've had these EMA crosses just indicating, you know, this downtrend has come to an end, and now we've technically started a new bullish trend. We've cleared the previous highs. We printed a new high here. So everything is looking perfect. So I think really the only thing that I need to do here is just wait. So the entry also looks perfect. The technicals are great. The fundamentals are great. And again, it's looking fantastic. Now, of course, I can't enter here. It would just be unreasonable for me to be a buyer here just to make any sense. So I'd rather wait until price gets back in towards the 50% retracement. That would line up with the previous highs on the left. So there'll be, you know, we've got the break, retest into previous resistance, into the fib, into the moving averages, and then continuation higher. So I think, yeah, gold is very, very straightforward at the moment. I don't think there's anything to really overthink, except where do you want to take profits, or where would we, you know, ideally like to take profits. So I'm looking, first of all, around 5,000. I'm not going to have a hard take profit, to be clear. I'm just going to let gold run. But I think 5,000 would be the first sort of major target if gold does like really flip bullish. You know, if we really establish a new bullish trend here, you know, higher highs, higher lows, fundamentals remain solid, so on and so on. Now, the reason for 5,000 is because it's sort of the next round psychological number. You know, we bounced a 4,000, 5,000 to the next level. Makes sense in my opinion. This also lines up with the previous support here on the daily time frame. Obviously very minor, but this was the first break that really caused this downtrend. So yeah, I think 5,000 is a reasonable level to look for first. You know, of course, we've got levels in between there like 4,500. But yeah, 5,000, if you wanted to take profit, personally, I think that's a relatively decent level. But of course, as I said, I'm not going to cap gold. I think it could go towards 6,000, 7,000, 8,000 in the future. Now, to clarify, I obviously don't mean that within the next month or two. That is a longer term idea. But yeah, if I can establish a position down on gold around the 4,000s, that would be perfect to just buy and hold. I want to see gold bulls panic selling if price goes below 4,200. I don't think they will. I don't think panic selling on gold would really kick in until unless we broke below 4,000 at these lows. So if these lows got cleared out, I think that's when we would get some real panic. And it's a case of, okay, the next real stop for gold then would be, you know, 3,500, give or take. Because again, if we break this level, there is nothing here on the left to stop price, technically speaking, until we get down to this level here. So I think that's what would induce some panic and sort of bag selling, if you will. I entered short on gold. What are you thinking about this trade? Duckling, I personally don't like it. As I've just said, I think this is a really, really good long trade. Not right now, again, the market price isn't favorable to be a buyer. However, excuse me, for the way I trade, I don't see a reason really to be a seller. The only thing, and this is me kind of forcing it here, the only thing I could really see is if you were a support and resistance trader. So you've obviously got the resistance through here. We are technically still in a downtrend on the daily. You know, the 200 is still above the 50. So there might be an idea that we could come lower on a technical basis, but the fundamental landscape, the H4, it just doesn't look ideal to be short at the moment. And, you know, as always, we could get to next week and gold is down at 3,500. Anything can happen. I'm not saying it could never work, but I just don't think it's something I'd really be that interested in. So what I always say when it comes to things like this, where we're looking at, you know, selling resistance or buying support, I used to have a friend, I haven't spoken to him in years, actually. Excuse me. But yeah, I used to have a friend that did that. And it was a strategy that you would look at, or, you know, you'd hear about and you'd be like, that just cannot work. That's such a silly approach. Or it's such like what's the right word? Like a newbie approach, like a new trader's idea of trading. But it worked. He funded continuous payouts. He was doing phenomenally well. So what he did was, again, sell resistance and buy support. But the way he did it was very unique. So he used to have like a 1 to 2% stop loss. And he used to just look for these really small moves off just a reaction. He wasn't looking for a big bounce or a reversal or anything. He just looked for a very small reaction off of those daily levels, and that's it. And that worked really well for him. But this was, again, a few years ago. I'm not sure if that approach still works or whatever. But yeah, back to the point. Selling gold, I just don't see it right now. Let's see how gold trades 2 weeks from now. Indeed, we will. I'm scalping gold every day. Very good. I hope it goes well for you. James, doesn't the gold setup look too good to be true? It's a perfect break and reversal of technicals. No, I don't think it does look too good to be true. It looks very good, Sluggy. The reason I'm saying it doesn't, though, is because we've got full alignment, which isn't a super common thing in the markets. Normally, there's something that's got to give. You know, sometimes I've got to give up on the technicals a little bit and use a 38.2 on the fib. Sometimes I've got to justify the fundamentals in a little bit of a different way than I normally would. But in this case, I think this is just a very good trade idea. But of course, you know, it could just completely fail and we go lower. So this is the fun. But yeah, as I said, to keep it super simple, I do lean towards towards the bullish bias on gold here. Christoph says, I'm long pound yen. What would be the first major resistance at the moment? Okay, so lovely to hear, Christoph. I really like the fact you're long on pound yen. I'm actually long on dollar yen. As I was telling you guys, I was buying the 200 daily moving average, just to quickly show you that before we move on here. So before the intervention, you know, something I was looking at and pointing out on this stream was, again, this 200 daily moving average. And on the interventions, that's where we seem to bounce. So practice what I preach and decide to start buying at that level. And so far, it's working out quite well. But yeah, what I'm trying explain by that is that I don't think, well, it's not I don't think, nothing has changed with the yen pairs. So in terms of direction, Christoph, I'd say you're perfectly aligned. I wouldn't be concerned at all. So I wouldn't expect another intervention at the moment. That could become an issue, which I'll discuss in a second. However, to actually answer your question, in terms of a level, I suppose here, maybe just because you've got a minor resistance here on the daily, then temporary support. So maybe around the 218 level, that's maybe when I'd consider cutting the trade if that's something you want to do. And the reason I would also look there is because this is where pound yen sort of peaked before the intervention. So we go back to dollar yen here. What we often see with dollar yen, and the reason I'm using dollar yen is because it's kind of the benchmark for looking at intervention type of dynamics here. So the MOF, excuse me, the MOF typically like to defend one level. So I think, let me just double check and make sure I've got this right, but I'm fairly sure 150 at one point was the MOF level as well. Actually, maybe not. Maybe I tell a lie. Maybe it wasn't 155. But yeah, if you look back again, if you get the exact levels, you'll see it. So we can see it again with 160. The MOF like to defend a specific level until it basically becomes undefendable. So you can see it's kind of like, what's the right word here? It's kind of like a war. You know, when you get an army trying to defend a certain region or area, and the army, the other, you know, the opposite or the opposition is just slowly pushing, and then you've got to give up on that area or that region. It's the same thing really with dollar yen. You know, you've got the MOF defending 160. They did it here. They did it sort of here as well. It just didn't do anything because, again, the rates haven't changed. The policy is the same. So it's still a good carry trade. So people are still buying this market. So they give up on 160, and then it becomes 164. So the question that I'm trying to raise here, I know I'm kind of going on about a roundabout way, but again, I'm here for an hour, so bear with me. So the question I'm trying to raise here is, are we going to see the MOF defending 164 and we end up seeing something like what we saw last time, where they intervene around 164 and continuously do that until they have to give up 164 and move to maybe 166, 167, whatever the next area will be. So that's the caution that I'm talking about, Christoph, on the pound yen. So just look for the previous high. Make sure you're trailing your stops. You could get a great trade, or you could get stopped out on the next intervention at the same level. Because, you know, the other thing is that I was talking about with the yen pairs last week was, yes, I was buying these levels, but they're not large size. And that was just in case we see another intervention, just to, you know, lower the price or strengthen the yen even further. I don't think that is going to happen, but again, I was preparing for it, but it doesn't mean that was what I was expecting. Prepare for the worst, hope for the best. There is no reason for them to really intervene at these levels. They may, because it's going to go higher. Again, nothing's changed. It will go higher again until something changes. That's not forever. So they may as well hold on to the money that they have and then intervene at a more significant level when it starts getting back to an uncomfortable price like 164. Because again, don't forget, interventions are very expensive. It's not a case of, oh, we're going to intervene, push this button, and it's done. It's expensive. It's not a cheap thing for them to do. So it's not a case of they can just intervene until dollar yen's back at 100, for example. So they've got to wait, and they've got to time it properly, and they've basically got to wait till they can't wait any further or any longer. What if gold doesn't give a retracement? It's a good question, but it will. Of course, I'm saying it will. I'm saying that in two ways. 100% it will have a pullback or a retracement, but where that will be is obviously a different question. Markets don't run forever. So the idea that we're going to have a pullback here isn't just backed up by the fact, you know, we've had the moving averages crossed, we've broken out, we've got the fib here, but it's also, again, this daily level we were looking at here. This is, as far as I'm concerned, the most sensible area for gold to have that retracement. In theory, what could happen is, you know, this throughout today and tomorrow, we have a very, very slow, sluggish move lower. And then we got low CPI come out on Wednesday, and then it continues higher, and we miss the entry. In that case, we've missed the trade. There's nothing we can do. You know, if you're really, really worried, then, I mean, I don't even like saying that, but if that is something that you're thinking, it might even be worth, you know, adding an extension or an extra fib level on if you trade fibs or looking for a different entry, whatever strategy it is, and maybe adding in slightly differently. So like down here, I added small size. You could do the same thing here. So rather than having one trade at 1% risk, for example, you could have one trade at 0.25, enter again at the 50% with 0.25, and then enter again down here with 0.25. That way you've staggered your entries, and if it did bounce here, at least you're in. Yes, smaller size, but that is one approach to do it. I don't endorse that, by the way, but that is one method. It's another possibility in the past. Gold had broke out, never looked back. Yeah, it did. But even so, even in this environment here, we did get pullbacks. It was tradable somewhat. Although in hindsight, I remember Nick and I were sat. I think gold was around 3,000, maybe 3,500. And Nick and I both had forecasts at 4,000 by the end of the year. And I'm fairly sure Nick caught quite a good trade, but I didn't, because we were stuck in this sideways consolidation. I just couldn't find an entry and ended up missing the whole thing. So that is again, it's a possibility, but you can't get everything. It's impossible. You will have markets where you have a really good idea and it just runs, or it just doesn't work in some way. Anyway, we'll move on. Did I miss Euro Swiss and Pound Swiss long entries last night? Let's see. Pound Swiss. No, it doesn't look like it, Christoph. As far as I'm concerned, it's not had a pullback yet. We are still sideways. I mean, obviously, I'm looking at the daily time frame. If you're looking at the H1, maybe it's different. But on the daily here, we are just stuck sideways. I'd like to again see a retest into the fib level, lines up previous structure on the left, also pulls back in towards the 200 moving average, and then a bounce and continuation from there. The fact that we are just sideways is a little bit of a concern for me. I don't like that. But again, what can I do? There's really nothing here. I suppose another thing actually is this daily resistance that we have come into and seen a little bit of slowdown. So yeah, I would say very likely we do come into this level, but again, we'll just have to see. So just patience. Finally, model is getting bullish on gold. Very nice, Ray Beast. Good to see you here. James, look at the 200-day moving average on what, Gabe's, on gold or a different market? So JXY chart open. This was actually from a YouTube video I made. I forgot to close it, but yeah, I made a video basically explaining why the Bank of Japan is in such a difficult position. So wait, what was your question? What's my thoughts on the yen in general? It's in a very, very difficult spot. Again, I talked about it quite a lot last week. And I did make quite a comprehensive YouTube video about it. So I'm not going to do the whole thing again today, but basically something to understand, when we had the interventions and we had the Bank of Japan hold rates, not last week, I think it was a week before last week, so 2 weeks ago, there was a lot of questions, and I saw it in this chat actually, someone saying that the Bank of Japan hiking just makes sense mathematically, and it doesn't really. That's not quite accurate, and the reason is because the Bank of Japan it's not just a case of, oh, the yen's weak, rates are low, we need to hike rates, and yields are going higher. It's really a case of, okay, well, yields are higher, the yen's lower, and the bond market's extremely unhappy. So the Bank of Japan has a very difficult job of trying to balance the yen price or manage the yen price, but also manage the bond market. They can't do both at the same time. Either way, if they hike rates to save the yen, the bond market will not collapse, but the bond market will be extremely unhappy, possibly collapse, actually, maybe, depends how much they hike. But again, they can't save both. So this is why I'm not really optimistic on the yen. That's why I'm saying that I think, pound yen and dollar yen longs are still great. There is a slight expectation of the Bank of Japan hiking, but even so, the yield gap will remain, especially if the Fed does hike rates. However, when we go to the Fed, I do agree with what Marco said, actually. Earlier, maybe 1 to 2 months ago, I was quite optimistic on the Fed hiking rates. And that's because, I mean, I can't actually show you now, but at the time, I think sort of early July, mid-July, the dollar had a fantastic score. Everything was doing well. We had pretty good NFP, sticky inflation, growth was doing well. PMIs were looking quite good as well. The dollar had a score of 100%. So, and also at the time, we also had the Middle East situation going on and the Strait was still closed. So it did make sense at the time for the Fed to hike rates. However, with the developments and the new data we've got, I agree with Marco in the idea that we're very likely going to not see a Fed rate hike this year. Maybe next year, absolutely, possibly. But again, we'll just have to wait and see. So KDX, I know, again, that was a really roundabout way, but hopefully it'll give you the answer. So I'm not really looking at this isn't a chart I'm paying much attention to. Again, it was more just from a YouTube video I was making and forgot to close the tab, but that is my general thoughts. I don't think the Bank of Japan really can hike rates too much. They can hike. I'm not saying it's impossible, but it's more the quantity they can hike and the speed. It's not enough, I don't think, to compare to things like the Fed or the Bank of England or the ECB or anything like that. So again, traders and investors will continue to use or continue to sell the yen to buy other currencies as an investment. Okay, right. What platforms do I use to trade? I use TradingView, I use Interactive Brokers, and I use what's it called? Darwin. And I also I've gone back a little bit to IG as well. I do a bit of spread betting. I kind of stopped doing that for a while, but I'm starting to like it again. They've improved their platform a little bit, so I'm testing it out again. Sorry guys, I'm just catching up. When I go quiet, I'm not ignoring you. My brain's not shut down. I'm just reading, so I can cover all your points and make sure I don't miss anything or anyone. James, we saw the perfect data after. Wait, hold on, James. We saw the perfect data after data for US shorts since last month, but still EF isn't giving any short bias. Perhaps it's adequately priced. It doesn't really work like that, Sluggy. The Edge Finder, I don't think, works on sort of a fair value aspect. I think the Edge Finder is super consistent in its scoring. If the fundamentals are if the scores are bearish, it will get a bearish reading regardless of what the price is. I'm like 99% sure. So the reason I think we're not seeing the dollar get, you've actually raised a good point. I didn't even think about it. Let's have a look. Why is the dollar not getting a more significant bearish reading on the top setups? And already we can see one of the big reasons is because the US dollar here has a 27% score. So pound dollar, we can see the GBP has a score of 50%. So we can see that this is quite a big difference, and that is why GBP USD is getting that bullish reading. But then if we look at, the CNY or CHY, that's only 40. So there is a bit of a divergence there, but not massively. JPY is only 33. The Swiss, only 33. The ZAR is only 33. So yes, while the dollar is weak, there are also other weak currencies fundamentally. So I'd say that's why. It's more neutral than it should be. No, well, I suppose actually I'm not 100% sure why the US dollar isn't getting a bearish reading, like the individual currency, but I understand why the currency pairs for the dollar are the way they are. The short I've taken is just a short-term trade while we wait for the pullback. I have small risk. What other assets? Hold on. What other assets do you think are worth as a new trader currency pairs? So, okay, so you've gone short gold on a short-term idea, looking for the pullback that I'm also looking for. Fine, I get it. Again, I think it's an okay idea. Personally, for me, it doesn't fit my approach, but I understand your idea there. So for other assets, in general, this isn't in terms of me telling you which direction to trade on which markets right now, but I would say in general, the best markets for newer traders, just because the data is a lot more accessible, the price action is a bit cleaner, in my opinion. So things like the GBP USD, euro dollar, and pound yen, dollar yen, actually, I would say gold is okay depending on how much money you've got. If you trade in a $500 account and you don't know what you're doing, gold is pretty much just a margin call market. I would also say something like the Nasdaq or the S&P can be okay. They move quite nicely as well, but yeah, I wouldn't say there is really a best market, because again, it really depends on your approach. So if you've got a system that does really well in ranging markets, then a lot of the Swiss pairs would do quite well for you. Or things like euro pound and Australian dollar New Zealand, they mean revert very nicely. So yeah, it really depends on what your strategy is to actually give you a quote unquote best market, but that doesn't really exist. James, also might see central banks start accumulating gold again. I think we already have. There was a central bank that has started buying again. I can't remember which one it was. Someone in the chat might know. But I'm fairly sure there was one that paused their gold buying and actually restarted it recently. But again, I can't remember who it was or when. unfortunately. I wish I did. James, could a hot CPI cause that gold pullback, or CPI would change the narrative? Yeah, I think CPI, I'll be honest, I don't like to sit here and really give forecasts. Actually last week is a good example. I was very wrong. I was sat here telling you, I have a feeling, I couldn't back it up, but I just had a feeling that the dollar isn't actually as bearish as really it seems. Obviously, then we had the really bad labor data come out, so I was proven wrong there. So that's another reason I don't like to sit here and give forecasts on news events. First of all, because it can go either way, but also I'm not an economist. I'm a trader, so different jobs. However, I don't think we are necessarily going to get a hot CPI, or hot enough to warrant any rate hiking ideas. So if CPI did come out slightly higher, okay, we're very likely then back in towards at least a sticky inflation environment. But then again, if we look back at the US data, it's where's it gone? Oops, here. None of this at the moment is screaming for a rate hike. So even if inflation does come out slightly higher, again, I don't think they can justify hiking rates based on the weaker labor data. Some people have also been looking at the unemployment rate. That's, in my opinion, this is really misleading because the participation rate is also significantly weaker as well. So this actually, to me, doesn't look like it's people getting jobs. It more looks like people have essentially, keeping it simple, essentially given up looking for jobs. So participation rate is low, but also unemployment's low, which isn't a great mix. So that's my opinion. So yes, a hot CPI could bolster the dollar. It could slow down some of its depreciation, but I don't think it's enough to start a new bullish trend, really. And the reason I pulled up oil here is to sort of show you something else here about regarding inflation. So I don't think oil at the moment is high enough in terms of price to really have that much of an effect. So it is still quite elevated, hovering around $80 a barrel. But one of the big concerns, obviously, is when oil starts heading towards 100, 110, 120, and so on, it really, really starts to affect people's energy prices and general business. It really does push up inflation. But we're not seeing that. Oil is quite flat really at the moment. So I don't think we can sit and look at oil price and say, oh, oil is really high. We're very likely going to get high inflation print as well. So that's my current stance. But again, things can change. Yeah, me too, James, waiting for retracement to enter. Very nice. Still optimistic about the pound CAD. I'll be honest, actually, Christoph, I've not reviewed my open positions today. So let's have a quick look at pound CAD. Is it still here? It is still here. So we're still getting a bullish reading, but I'm fairly sure the trade's actually in a bit of drawdown right now. So let's see. Yeah, it's not looking great. So I entered pound CAD last week, and it was a little bit of a tricky one for me to gauge because I kind of got two entries. So the entry I got on the H4 here looked fine. So where did we enter? Right here. So fit from the low, to the high, standard approach, bullish trend was establishing here. We had the edge finder that was bullish. So I entered on the rejection of this 50% retracement, looking for this long position to continue to run. However, we're obviously not seeing that. So the other approach I'm actually looking at here is on the daily. So let's just actually go to a fresh market so I can show you it without the interruptions here. So hold on, let me just redraw this. So here, so fib from the previous low down here to this high actually doesn't meet. So in this case, we might have to add the 38.2 and a long position from here. So what we've had is a break of the previous highs here. So obviously at the break, we have already had the retest, but I would be willing to go in again if we get sort of a double bottom here on the 38.2. The daily is bullish, the edge finder is bullish. I wouldn't mind taking maybe one more attempt and just seeing if we can get this to run higher. So that is, again, the other approach, but it's definitely not ideal. So we'll see. I think there are really better opportunities, though. Again, this is just one of many trades. So if this one is stopped out, I'll probably just move on to a different market. Are there still live stream giveaways? Oh, are there still live giveaway accounts on the stream? Yes, I think Marco does them. You've actually missed it. I'm not sure because the stream schedule's changed. I know he used to do them in the afternoon when the stream got a bit busier towards New York session. So yeah, I'm not sure if he still does at the exact times, but what you can do is go to the A1 Trading website, or you can scan the QR code on the screen. Actually, you can go to the broker and prop firm offers, and you can see here you've got prop firm giveaways, or you can get discounts on various different prop firms. So just because they might not be on the stream, again, I don't want to say if they are or not, I'm not 100% sure. But even if they're not, you can still go to the website and get the same things pretty much. If you rent buying silver, then you shouldn't be here. Do you mean if you aren't buying silver? Matthew, hello. A long gold on 15-minute chart, stop at 4,300, enter on the 61.8% retracement. Let's have a look at that. Entered gold on a 15-minute chart. Yeah, I'll be honest, my friend. It could work out. I mean, gold is bullish, but the issue really is obviously the high time frames that you need to account for. So what we've been looking at is this daily level of resistance that we've just come into. So I think being a buyer right here, again, could work out for you, but I just think I think either way is a bit too risky at the moment. Yes, you could be short. That makes sense. I think being a buyer, again, you're trading with the trend, you're trading with the fundamentals. It makes sense, but I just think the actual price level itself is just not the best really to be involved with at the moment. If you're not buying silver, then you shouldn't be here, chat. Trading 2 on 2 is good. Okay. Thanks for your input. IBKR, yes. Interactive Brokers is a very good broker. Is spread betting tax-free? Yes, with some stipulations. In the UK, by the way. I'm not sure about other locations, but in the UK, to keep it simple, the way spread betting works in the UK is it's tax-free, but you also can't offset any losses. So let's say you have a CFD account and a spread betting account. You make money, you lose money on the CFD account. You can't then offset any losses on, or any gains or losses on the spread betting account. It's completely tax-free, positive and negative. So there is that, but then also it's not tax-free if it's viewed as your primary income. So if you are a full-time spread betting trader, you will still get taxed on it, but it's not capital gains tax. I think it's income tax because it's viewed as gambling in the UK eyes, not as trading or investing. So that's that. But again, I didn't say again, but hire an accountant. I'm not here to give tax advice. I'm not qualified to do that. What are some good strategies for ranging markets? I'll be honest, I hate ranging market. I don't trade ranging markets, but one good example of that is Aussie New Zealand. So if you go out to the weekly time frame, in a really ranging market like this, you would literally just be buying support, selling resistance. That's basically all the range is. You know, we're hitting highs and then we're going back to the lows, hitting the lows, going back to the highs. So in theory, all you would want to do is buy the lows, sell the highs. However, I don't really like that approach. It's not something I do. Could we be entering stagflation market if CPI comes in hot after the cold labor market? That is a slight risk, actually. Yeah, Shakes. We could absolutely be heading into a very, very difficult period where we've got cooling growth, weak labor market, and then higher inflation. That could be quite bad. However, again, I'm not expecting CPI really to come in that high, if it does even come in high. Breaks 120, could be a recession. Oh, oil, gold, silver, and platinum is about to push higher. Potentially the DXY. Breaks 120 will cause a recession. Do you mean oil will cause a recession if it's 120? US dollar Swiss shorts is hovering around an H4 fib. Better to wait for the CPI data first. In this case, Christoph, personally, I wouldn't, just because it's my personal rule when it comes to news is around 24 hours. Not super strict, but that's the general rule I give myself when entering trades. If there's high impact news coming within 24 hours, typically I'll wait for the news to pass. But we're 48 hours out, maybe a little bit more than that now. However, with pound Swiss, I did cover this yesterday in my YouTube video. I don't like it. So if we look at the makeup of dollar Swiss at the moment, there is actually a slight argument that economic growth could be leaned on a little bit more because it is negative 5. So this is quite significantly bearish. However, if we zoom out a little bit, the technical signal, -3, sentiment's -1, inflation is bullish. So really, I mean, I don't pay attention to technical signal because I do that on my own. That's my moving averages. I also don't really care too much about retail sentiment. So really what I'm looking at here is some, yes, bearish economic growth, but then bullish inflation and a neutral jobs market. So I do think that, yes, the direction or the bias is bearish, absolutely. But I just don't like the makeup of this score. It just doesn't sit right with me. I like to see a bit more of a, the three pillars that I'm always talking about. So the three pillars, for anyone that doesn't know what that is: economic growth, pillar 1, jobs market, pillar 2, and then inflation is pillar 3. I like to see at least some sort of matchup between them. So, we need to see a bit more of a collective bearish view, if that makes sense. And then on the technicals here, it's a little bit too muddy. So the H4 here is just ranging. Yes, we can take the high and the low, but I don't really want to just be stuck in this range. This just doesn't seem appealing to me. And swap wise, not great. We would be losing money just by holding this ranging short position. So yeah, it doesn't look ideal for me, to be honest, Christoph. Sluggy says oil prices came down slightly lower. And last AUD CPI missed, and tomorrow we have the RBA OCR decision. Indeed. Yep. Nice rework. Thank you, 2288. Did put a lot of effort into that. Sluggy says, trading ranging markets is tricky because ranging markets always hindsight. That is, Sluggy, you said that perfectly. I don't know why I didn't mention that, but yeah, you are 100% right. That is a fantastic point. Yeah. So, again, Aussie New Zealand probably isn't the best example because it is, it's known for its range bound market. It's known for its mean reversions. But let's just take away the actual market and just look at the price action. How would you have known that this is a range at the time? So on these breakouts, how would you have said, okay, this is going lower and we're not actually going to break higher, or this isn't a new bullish trend? Yeah, again, as Sluggy said, it's so much easier to see a range in hindsight, whereas a trend is a little bit easier because, you've got the established moving averages. You can watch the higher highs and higher lows in real time. In my opinion, trend trading is just the peak, not in terms of like skill or anything like that. I just think it's the easiest, actually, because, you're not fighting anything. If anything, you're actually, by trading with the trend, sort of by definition, you are trading with the institutions. And the reason I'm saying that, or what I mean by that, is we don't move markets. Retail traders, if we're bullish on something, that's great, but we've got no impact. We can't move the markets in any real sense. So in a bullish market like this, who is moving this market and who's buying it? Well, clearly the big players. And they do that for a reason. They don't start trends and buy into markets or anything like that because they feel like it. They're always doing everything for a reason, and it's always a good normally a good reason. So again, by trading into trends, by definition, you are, again, trading with the institutions and the big players by default. So again, that's just another little tick in the box of ease because we are just collecting their breadcrumbs. We're trading in the same direction. Now, again, time frame, context, and nuance, and all that all comes into play, but I'm trying to keep it really simple. GBPUSD sell zone. Yeah, let's have a look. Yeah, GBPUSD has me a little bit on the sidelines right now, although actually, yeah, so I think there's definitely two ways you could approach pound dollar at the moment. So the way I would do this is the edge finder's bullish. We've actually just broken out of this downtrend or this bearish trend line. However, we are obviously stuck at this sort of double top. So what I would need to see here to confirm really any type of trade for me is a new high get print or higher high get printed, and then some sort of higher low, whether we come back and retest these previous highs on the left or whether we come back down and retest the trend line. I don't know. I don't trade trend lines, but again, they're on my chart, so I'm going to pay attention to them now. And then maybe a continuation higher. At the moment, I think this is a little bit too messy for me to be involved with. Again, we've got the double top, so yes, maybe a short idea here. And then again, on this daily time frame, we are kind of stuck in this little wedge type pattern where we're clearly making these lower highs continuously. So maybe an expectation for a lower price here and continuation of the behavior we've seen does make a little bit of sense. But again, because the edge finder is bullish, I'm leaning bullish here. So I'm just waiting for some sort of long setup. When that will be, I don't know. Oil still has a weekly setup. It should break higher from here. What do you mean it has a weekly setup? So guys, just a little bit of information. When you are telling me things like this, it's like there's a setup or short idea or something, I can always go and look and try and decipher it, but a little bit more information on why always helps, so I can try and look into it a bit deeper for you. It's more for your benefit than mine. I don't mind sitting here and just having a browse, but if you want me to really sit and have a proper look, tell me why you think what you think, and then we can dissect it from there. Okay, gold, silver, platinum has the daily setup, hence why they're pushing out. But I don't know what your daily setup is, my friend. So that's the tricky part here. Simo, good to see you, my friend. Hope you're well. Hope you enjoyed your weekend. Have we checked New Zealand US dollar? No, we haven't actually. Where is it? Here. Let's see. Do we have anything on the Edge Finder? Slight bullish reading. We've got a score of 5, so it's okay, but not fantastic. You know, if you're wanting to trade a dollar pair specifically, Aussie US dollar looks better. Euro US dollar and pound dollar all have higher scores. But you asked for New Zealand dollar, so we'll take a look here. Now, because the score is only 5, it kind of reduces my confidence a little bit. Now, we do have the RBNZ that looks like they're going to hike. When, you know, actually, let me just double check. Just give me 1 second, because I don't really keep up with the RBNZ too much. Okay, so there's a 50-50%, sorry, a 50-50 probability, I think, of a hike in the next meeting. So we'll see, but that is at the moment, I think, a little bit better than the Fed. So I would say yes, longs maybe do make a little bit more sense here. Let's get rid of this because I don't use a 38.2. Now, fortunately, there's not much structure within the fib, so I'm actually going to slightly modify this idea and look at something a bit more like this, because, you know, ideally we like to use the fib, look for a structure on the left. We don't really have that, so the closest we've really got is a 50% retracement within, within this sort of overall zone here. So we've broken above, so you know, break, had a little bit of a retesting period. So from here, I think if I was going to be a buyer, I would want to see this. So pull back towards the 50% retracement, towards the 200 moving average, and then a continuation. The technicals look quite nice. You know, we've got the higher high, we've got the higher low, another higher high here. So then, you know, create a new higher low there, and then a new higher high. I think we're pretty much set. But again, this is really, really simplified. I think there are maybe better opportunities within things like pound dollar, euro dollar, again, regarding the score. In theory, trading community is retail institution. Well, we're not an institution, but I suppose you could call us a collective, a retail collective. Sounds a bit cooler than an institution, I think, or like a syndicate. I don't actually know what syndicate means. I think it's just like a group of people, but I don't know. Sounds cool. Momentum is best. Yeah, I agree, Ray Beast. Nikkei short currently hit a very clear daily fib. Interesting. So the Nikkei, yeah, I completely scrapped the Nikkei idea, but let's take a look. Yeah, I see what you're looking at, Christoph, with this, but the issue for me is the daily trend's bullish. We don't have a bearish reading on the Edge Finder anymore. And I was actually looking at the Nikkei earlier on sort of a mean reversion look, because this is something I was paying attention to when I was short. But what we can see that, you know, a 200 Bollinger Band on the weekly, the upper limit actually does seem to get used as support quite frequently. We do obviously have these reversions back to the 200 moving average, but I wouldn't want to be selling into this, to be honest with you. I think really the better option is just to follow the movement and follow it to the upside. However, actually doing that is a little bit more tricky than saying it. So how do we get into this? I think I'm in, more of a pause actually on the Nikkei at the moment. We did cross into a bearish trend here. You know, we've got the 200 that is above the 50. So technically speaking, according to the moving average, we are in a downtrend here. But of course, we are creating these newer highs. So this looks like to me, we're actually about to start some sort of new bullish trend. So I need to see these moving averages cross over, and then I could get in on wherever the next pullback will be, looking for that continuation higher. So I think that's the approach I would have to take, because at the moment there is no setup for me. But yeah, I mean, if we also look at the previous time, the Nikkei had, you know, some meaningful move lower. Actually, that was a terrible drawing, but you see it here. You know, we came up quite high, moved up significantly far away from our daily 200 moving average. Then we had this pullback towards the 200 and then just continued to run higher. Is this the same thing? You know, we came quite deviated from our 200, pullback, didn't quite meet the 200, and then we're ready to continue higher, just like we did during this period. I think it's possible, and I think that's what I would bet on. But again, I just need to wait for some sort of setup here. Momentum has been working for years. I think momentum is one of those things that can't really be arbitraged out of the markets. You get a lot of short-term things or quant strategies, all these types of things that eventually stop working. They get arbitraged out, or the edge just decays. But I think with momentum on H4 timeframes, daily, things like that, they can't really stop because people buy and sell for reasons, and they currencies, specifically currencies and stocks and whatever else, actually they do become fundamentally strong and fundamentally weak. So people will want to buy and hold, or sell and hold, and things like that. And that's something that can't really, that's just a fundamental dynamic of the market that I don't think will ever change. Hopefully, anyway. If that ever does change, I'm going to be in a world of trouble. Momentum is okay. Simo, you had a beach. Oh, you went to the beach on the weekend. Very nice. Hope you had a good time. At TraderNick, where is Ivan? Well, I'm not Nick. My name's James, but I actually don't know where Ivan is, to be honest with you. I've not seen him on these streams in a while. I'm sure he probably still comes on now and again, but yeah, I'm not 100% sure. What's my take on Euro New Zealand? I don't think I do have a take on Euro New Zealand, actually. Let's see. Yeah, we have looked at Euro New Zealand previously, I think, on the stream. And yeah, we don't actually really have much of a thing here. But what we're seeing is really just no direction, actually. We're hovering. Oh, that's terrible. We're hovering around this support level. The moving averages are just parallel, chopping up and down. There's no direction. So, over here we can see the 200 and the 50 moving up together in sort of a fanned out visual, whatever you want to call it. But here again, they are just sideways. There's no direction. So in terms of technicals, I have absolutely nothing here. There's nothing for me to go off. Fundamentally, there is nothing on Euro New Zealand. So very likely it's just got a neutral score, which means it's either -4 and above or +4 and below. So fundamentally, there's no drivers. Technically, there's no trend. So yeah, there's nothing on Euro New Zealand for me, unfortunately. I mean, crypto? No, I don't trade crypto. However, we do look at Bitcoin now and again on the weekly, just to really keep up with it and just have something to look at. But yeah, it's not something I pay that much attention to. So I think if I had to take a side here, I actually would lean more towards the bullish end of Bitcoin. So one of the narratives I was going with in this market was that this is too obvious. This level, I'm sure everyone and their grandfather has this weekly level on Bitcoin, at least marked up or looked at or something. So when that happens, oftentimes this becomes what a too obvious level, and it doesn't work. So that's something I was considering at the time. And also the fact that, we attempted quite a few times to come higher, and we just failed. We've had multiple opportunities at this low to again, have that bounce higher. We didn't really do it. But now we're seeing dollar weakness. We're having questions about whether the Fed is going to hike rates. It seems like the situation in the Middle East has potential to start cooling down. I wouldn't mind the idea of maybe having a bit of a low risk speculative position on Bitcoin at this level with a stop loss right below, just in case we do end up coming to visit 50,000. But yeah, that's my idea. But again, I don't trade Bitcoin, so I'm sure you guys probably know more about it than I do. I'm purely going off just technicals here, so that's my 2 cents. Can you look at USE CAD? Do you mean US dollar CAD? I'm going to assume you mean US dollar CAD. Just bear with me. Let me catch up on the chat. James, are you still in pound CAD longs? Yeah, I did actually go over the pound CAD idea not too long ago. So rewind maybe 10 minutes and you'll see it. It's just I'm running out of time here. I've still got charts to go over, so I'm not sure I'm going to be able to go over it again. Okay, so you gave me a strategy. So the 100 EMA, it didn't let cross the 800. Yeah, oh, you use 800 EMA is crazy. The 200. Okay, so you use moving averages. Okay, I kind of get what you do. It's I'd say it's similar to mine, maybe a slightly different use case, but yeah, I get what you're doing. You're welcome. Okay, fair enough. Thanks, I suppose. James, IBM longs at 203 were the best. Very nice, Ray Beast. I'm glad you made some money on that, or if you did. What do you think gold going to go up to? I think, to be honest, I really do think gold is going towards 5,000, then 6,000. But the big thing really is how CPI is gonna form, and also what happens in the Middle East. Are we gonna have some sort of peace deal? Is that, is the strait gonna reopen, or is it gonna re-escalate yet again? So I think gold is a very good long idea at the moment, but I think there are still some question marks in the air. So on Wednesday, we'll know about CPI. But again, the Middle East situation, I don't know. Yeah, US dollar missed big time too, creating divergence. The only thing stopping me from shorting US dollar CAD is the EF technical support. Yeah, so actually, I've just seen dollar CAD. So we were last week, and sort of over the past 2 weeks, give or take, I have been looking at this daily level. So, we've got the previous highs here on dollar CAD, and I was looking to see, can dollar CAD revisit this level? And if it does, do we have a continuation higher? Because, this is a break, retest, and continuation pattern. And I think I might be mistaken, but I think this is a fib level as well. Oh, it's not. Hold on, it's at the 38.2 in this case then. So we can see we are kind of in a fib zone if we force it with the 38.2. So there is a technical reason here to actually be a buyer. But again, fundamentally, I just don't see it. So bullish trend as well on the daily. Technically, it looks brilliant, but yeah, I can't really justify it. So I've not looked at Canada's economy in a little while. So let's see what they're doing. Yeah, I mean, if we look, the Canadian score 57, whereas the US was what, 30-ish? So yeah, there's quite a large divergence there in terms of the fundamental strength that we're seeing on the edge finder. So I can't justify being a buyer, but I also can't justify being a seller because, again, the daily is quite bullish in my opinion. So I'm being pulled in two different directions. Technicals tell me to buy, fundamentals tell me to sell. So I can't do either. I need them both to line up. Hi, James. Australian dollar, US dollar, 4-hour fib. Okay, let's have a look. Australian dollar, US dollar. What did you say it was? A 4-hour fib aligns with structure. Edge finder gives it a good rating. Okay, let's have a look. Sounds interesting. I suppose I'll be honest, I don't see a fib level that's ready yet. So actually, let's get rid of the 38.2 again. Yeah, so I see what you're looking at kind of here. The H4 does look really good. I don't like it though, because this fib is just too short. And this is fully discretionary. So, this could work out, but I don't like it when the fib is just too small. I don't know how else to describe it. So I think what I would do here actually is see what we can find on the daily. So in this case, maybe a fib from this daily low to the daily high, and see if that could produce any type of entry from that point. As for the edge finder, I'm fairly sure you are right. Yeah, the Aussie US dollar is bullish. Yeah, so we got actually very bullish with a score of 7. So yeah, I think being a buyer overall, it makes a lot of sense. However, in terms of actually getting the entry, it seems a little bit more of a difficult task. So let's see what we've got. Suppose we've got a little bit of a sort of resistance level through here. We could see a small pullback from that point, or from this point. Yeah, so I think really, the fib is just not that useful in this situation, unfortunately, because what we have is, the fib zone that unfortunately is kind of already being used. We draw the fib from this low to this high, but we've already rejected this level. We've already retested these highs. So yeah, it just seems a little bit too fragile. So again, to summarize, yes, I do think being a buyer is probably the best way to go here. But yeah, technically, I think I just need to wait for a bit more of development, really. True. I think August is going to be ass unless we get actually yen intervention. I'm not sure we are going to get another intervention. I think the intervention question really arises on really comes down to the question of how fast does dollar yen appreciate again, and to what level. So I think if we get back to 164 very quickly, there is quite a high chance of another intervention. So yeah, we'll see. Something that is, I'm thinking out loud. So we had the Fed and the MOF intervene basically at the same time, one after another. I think the MOF was first, then the Fed. So yes, this was quite a large drop, but to say that 2 countries intervened on one currency, I don't think this was a very large move at all, actually. So that makes me then have the question, did the MOF actually keep some money aside for another intervention? Are they planning another one at a specific level? Maybe. Again, this is pure speculation. I've got no idea. But I just think that this move here for, again, 2 countries intervening in one currency, it just doesn't seem like that much of a large move. Keep in mind, the MOF did all of these on their own. So yeah, we'll see. Again, just pure speculation. Don't take it too seriously. Just thinking aloud. We've only got a couple of minutes left, though. I'm fairly sure, let me just double check, but I'm fairly sure we've got Alan coming on in a second. Well, not in a second, sorry, in about 3 minutes. Yes, we do. We have Mr. Perez, Mr. Allen coming on, for the next half an hour. Then we have TraderNick, and then we've got Alan and Marco on a joint slot, and then we have Tiger later today. So, very good lineup, as always. I stopped following the yen. Yeah, I mean, I've told this story probably 3 or 4 times on this stream now, but it's just so painful, and it's quite funny, I suppose. So I was buying dollar yen. I think I bought it here, give or take. It might not have been that exact level, but I bought it 1 or 2 days before the intervention. And again, people who watch me or watch my segments or my videos regularly will know that the yen is something I do really struggle to trade. Not for any real reason. I just seem to get the yen wrong quite a lot. And it's just one thing or one currency that it just doesn't agree. We're just not friends. So, throughout this whole ride, I shorted dollar yen here at 160, looking for another intervention. This was fine. I was happy to take that loss. I went into the trade actually expecting the loss. I used lower risk. That was fine. But then this whole move here, I was sat on this stream saying, I'm not going to buy dollar yen because I just don't like where price is. I think traders are waiting for the intervention. I don't like it. And then it just continued to run higher. And again, I was still quite optimistic on the dollar at this point. The day after, I kid you not, the day after I entered the position, we get the intervention. It's just one of those things that it's comical. If you don't laugh, you'll cry. So all I can do about it is laugh. But it was just so frustrating. So yeah, that's my little story for the end of the stream. Anyway, what's going on here? Oh yeah, I was actually reading your message. I too stopped following the yen, but this stupid intervention thing came in and I got hooked again. Yeah, I mean, I think buying yen pairs down here, I personally think it's completely fine. I don't see a reason not to. Again, the idea I had about not wanting to buy up here because the intervention risk has happened now. I was saying I will happily buy dollar yen if we get back to the 200 daily moving average, which is what happened and what I did. So that's fine. So I'm going to hold these positions. I don't think I'm letting go unless policy does change, because I'm not going to try and get back in. It's not being fruitful. But yeah, no, I do agree. I think the yen it's weird actually, because I think dollar yen is such a simple market. It's so straightforward and easy on paper. Just buy, it's carry trade. It can't be any more simple, really. But again, it's a bit of a choppy beast sometimes. It's not tamed. Anyway, why not stop trading? What do you mean, why not stop trading? Why would I stop trading? Still in UJ shorts? No, I was never in dollar yen shorts, my friend. Love your content, mate. Thank you. Even though I know it like everyone else, I always take something from your videos. Thank you very much. I appreciate it. Yeah, I mean, that's the problem as a content creator. You can't cater to everyone in one video or one category. So sometimes I go a bit more in depth, like I did with the Bank of Japan video, and then sometimes I keep it as simple as possible with like the trade idea type videos. But I appreciate the feedback. James, I bought GJ at the second entry, same as your UJ. Very good. Nice. I love that. Anyway, ladies and gentlemen, I'm going to head off. As I said, we've got Alan Perez coming to join the stream, so don't go anywhere. Another guest and another couple of hours on the show left. So guys, stay safe. Enjoy the rest of your days. Thank you very much for being here. Don't get margin called. And yeah, I'll see you all tomorrow. See you later.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. Happy Monday to ya. Hope you had a great weekend. I did. I had a relaxing weekend, but wow, we are back at it once again here. We left a very crazy week, so we'll see if it continues on. Right? We had that NFP print that caused a lot of softness in the dollar. We had some yen volatility. We had some false hopes on the Trader Hormuz stuff. So it's a very interesting time for us here. So we'll go ahead and see what happens, what this week brings. But just looking at the Sunday market open, pretty chill, I would say. The only one being USD JPY is the only one that's really moving here. But everything else is pretty relatively quiet, I would say. DXY is pretty flat. S&P and Nasdaq, the equity side of things, is pretty flat. Gold even too. Gold is pretty flat. The metals, the only oil. 3.2%. That's meaningful. Okay, so we'll talk about that for sure. But yeah, pretty quiet week. Nothing too crazy, I would say, from the headline side of things. So unless you guys see or saw anything different, then definitely let me know. But pretty quiet, I would say. Morning, Kier. Morning, Sluggy. Lunar. Hello. Hope you guys are doing fantastic. All right, let's see what we got this week. Okay, let's see what we're working with from the technical side of things, what fundamentals, and then we'll go ahead and see. So your email will set up later today. Awesome, Sluggy. Thank you very much. Man, that has been a very big challenge. So I appreciate any help, any feedback I can get. All right, so let's go ahead and see what's going on here. Currency strength looks pretty normal. Everything is pretty much just in line doing its thing besides Japan, right? Yen, really weak here today. From an economic calendar standpoint, as far as what we got on the docket coming up, let's go ahead and look at that too. Okay, so we have Australia tonight having their interest rate and policy as well today, so that's going to be big. We'll see, right? Because right now the way I see like Australia and Kiwi is like Kiwi's probably the stronger one. You had Australia kind of walking some of that back, that rate hike back, and then Kiwi actually walking some of that up. So you have some divergence there, especially too on the inflation front. Like Australia's inflation has been cooling, whereas Kiwi has been rising. So I'm curious to see if this continues the trend to the downside for like Aussie Kiwi, or if it gives it a little bit of a bump. So I'm curious on that one. Then on Wednesday, we have core CPI. So let's talk about this, right? Because we need to really understand what's going on. So the big eyes, everyone was looking at NFP on last Friday. Now that's out the way, and now we need to look at something different, right? The market's expecting something else. So core CPI, let's look at CPI. Let's get CPI year over year. It's supposed to come in at 3.4 versus 3.5 previous, okay? And if it comes in at 3.4, then that means that inflation is technically trending lower. So this would be big. If it comes in at 3.5 or above, I think that could cause dollar strength, okay? Because you have this. Let me show you the chart. This is what I'm talking about. Let's go to Edge Finder. This is very interesting. So I'm going to change the zoom here real quickly because I like to have it different. Let's go to economic data. Let's go to inflation and CPI. Let's look at the US, okay? Right now, the Fed has the big question. And the big question is inflation really taking care of itself, or is it sticky? So we have brief moments where, for example, right here, where you had inflation trending lower, got sticky, it flatlined at 2.4, and then from there on, it went back higher, okay? And so the Fed really wants to make sure that inflation this time around is cooling down actually. So right now we were at 4.2, then we're at now we're at 3.5. And so the next release says that we might get something. The forecast says we get something at 3.4. Okay. If we get, that was ugly. My bad, guys. If we get it at 3.4, then that is lower than 3.5. And that can make the case that you are stair stepping downwards. Okay. If you were to get something like 3.5 in line, okay, that means just inflation is not as loose. It's still somewhat sticky. Okay. So that's the big one. So if you were to get a 3.4 CPI, that would be good. If you were to get anywhere, in my opinion, in line with expectations or higher, not good at all. CPI month over month is expected to rise though, 0.4 minus 0.4 to 0.1 positive. Core CPI year over year, it's supposed to come down slightly as well. So previous is 2.6, and now it's looking to go at 2.5 supposedly. And then the core CPI month over month is looking to go ahead and tick up higher. So the month over month figures are looking to tick up higher, and the year over year figures are looking to tick lower. I'm focusing on the year over year figures, right? I want to make sure that it is cooling down. So that's what we're looking at here. So the market right now is currently pricing in. I would say that you probably have a little bit of this in DXY this week. I say you probably have a little bit of a slowly kind of grind higher in DXY. Maybe you have some anticipation or positioning on a higher CPI print. And then if it's cooler, then you were to see a continuation lower in DXY. That's kind of my thought process there. So that's what I'm going to be looking for. Beyond US, you have GDP in the UK, which is going to be big there. They've been doing pretty good as far as the British pound. Like the UK has been, look at that. You had a pullback. I mean, strong upward trend here. Strong upward trend. You had a pullback at one point. This was the 38.2 and the 200-day moving average support. You tapped into it, wicked up higher on that same day, and you've been slowly grinding higher. So I think we do meet some resistance here at 1.355, right here for pound dollar. So if you are long anywhere here with pound, you are in a good spot, and this is overhead resistance. Now, depending on CPI, right, it could be very coincidental because markets are very cute at doing this, where you have essentially price hits a level of resistance, and then you have something fundamentals that changes to just cause it, reject it, and then you're back in range bound motion, right? So like if you were to get right here with British pound UK, and then you have a super hot CPI print or a hotter than expected CPI print in the US, well, that would cause some weakness in pound dollar. And then this level just acts as resistance one more. And this is just a textbook, just, support resistance type play. So that's what I'm looking at for pound dollar. But I wouldn't short pound dollar. It's pretty strong. I would look to short other things, like depending on what happens with Australia too. If their stuff comes out weak today, then I'll look to go ahead and short this if you do get some dollar strength into the picture. So that's what I need to do with this live stream. That's kind of my objective here, is figure out like right now I am long, or I am short dollar, going long or going short. Geez, I can't talk. Going long euro dollar, going long gold. But I need to find out what I would do in the events that I need to flip flop, right? So that's what we're gonna do here this stream here. Beyond that, we have PPI again, same week, so another inflation read as well. What is PPI looking to do? So let's look at that. PPI is looking to tick up, both of them. So they're both ticking up previous from my expectations. So that's gonna be interesting. That'll be very cloudy if you were to get hotter prints for inflation, just because right now the viewpoint, like the obvious kind of direction, is like for dollar bearishness right now. BOJ Simo said BOJ September rate hike signal led the US to join in the intervention. Yeah, it was definitely a coordinated joint intervention for sure. And then you have retail sales in the US later, and you have unemployment claims as well. So it looks like just basically Australia, UK, and the US are the big heavy hitters. You do have Kiwi's inflation expectations as well, but yeah. Okay, so I would say that's a lighter week. Usually sometimes you have weeks where you have like 4 different central banks making decisions and giving their rate statements and all that good stuff. So this is pretty light. It's morely US focused, I would say. So that's what we're gonna be looking at. So let's go to top setups page and see what has changed. And then again, I do want to make sure that I kind of start to figure out today on this live stream, either this segment or my second segment, what is it that I'm going to be looking to do in the events that I do have to flip bullish US dollar. So let's see. Pound basket still getting a very bullish reading. What I'm going to do actually is I'm going to take the neutrals off. So for those that don't know, this is just a market scanner. It helps you kind of include fundamentals, technicals, and sentiment to give you like very bullish readings or bearish readings and stuff like that. So let's look at this here. So top down, pound dollar still getting good readings. So the pound basket, you have pound Swiss, pound CAD, pound yen, pound Kiwi, still getting a very bullish reading as well. So honestly, if we do get like a strong GDP number in the UK this week, I'm sure this would only increase that score. And so I'll be looking to probably go along the long basket if I get some opportunities. In fact, I'll look at the pound basket later right now and just see like which one looks good on a technical basis. That way, if I do get some pullbacks or anything like that, I'll be looking to join that trade. Euro dollar is getting a very bullish reading. I love to see that. So I'm currently long euro dollar. This is the position right here. My take profit level is similar to that technical level on pound dollar, where you have like this level of resistance along with the 200-day moving average, or the 200-day moving average on pound is lower. But for me, this level right here looks quite nice. You have the 200-day moving average looking as resistance. Then you also have just this level right here, which is active. So if we were to get into this level, I'll just get tagged out, reevaluate myself with the euro dollar. So it's getting a bullish reading. So I'll just keep holding that trade and trail structure along the way. Gold is getting a bullish reading still as well. So shout out Edge Finder for catching this one. Let's look at gold real quick here, what I plan to do and how I plan to manage the trade. So let's go ahead and drop down to a 4-hour chart and we'll see. So gold right here, you have a couple levels of structure. So this chart here is starting to get a little bit crowded, but let me take this one out, and then this should be okay. This should be better. So with gold, I have a couple levels here, technically speaking, where I'm defining pullbacks and where I'm defining where I can trail structure at. So let me clean this up for you guys just a little bit here. So okay, should be, I'm gonna make this a little bit skinnier too. Okay, cool. So this is gold, right? I am long on this position. I have my stops trailed to this level here where you had a break pullback, buyer stepped in, held it higher. So that's where my current trailing stop is at. This one too, you could count it as that. So if you were to see a breach higher of this level of resistance, pullback, and it holds, then I will go ahead and trail my stop to the next nearest one, and just so on and so forth. Now, as far as my take profit goes with gold, I have that 200-day moving average, which is at the most nearest kind of big level that I'm looking at here. So 200-day is at 4,500, you could say. So that's kind of where I'm at. Now, what happens there? No idea, right? No idea. If you just breach right through it and then retest this level and then continue higher, then I'll just trail stop here. But if you start to see a decent rejection right over here at that 200-day, then I just take profits. But for right now, I'm just trailing stops on this one, letting it do its thing. Okay, back to the top status page, and we'll continue on forward. Aussie dollar getting a very bullish reading. We'll see how that one goes, especially today with the their rate statement and their forward projections and all that good stuff. So we'll see. That one's on the back burner. Not really looking to participate in Aussie dollar. Silver getting a bullish reading of 6. Actually, silver has been doing quite well, I would say. Yeah, broke out of this channel here. So if we go to a daily time frame, silver is now breaking out of this right here. So I'm curious to see if, similar to gold, the next level would be that 200-day moving average. But you guys know how I feel about silver. Not really looking to go ahead and participate on that one. So I'm going to stick with gold there. Pound CAD, that's a pound basket pair. I'll go over that one. UK 100, the FTSE, not really looking at that one. Kiwi dollar to the long side. If Kiwi dollar continues its strength, its relative strength over Kiwi or over Aussie, I might be looking to go short Aussie Kiwi. I was looking to do that last week, but we never had the technical readings that I was looking for. So I was looking for a break of this level of support and the 200-day moving average, and we got neither of those. So still on the back burner, but again, I like this pair. I'll be monitoring it shortly, and I have my alert right there here. So this white dotted line, this is just an alert. So if it gets tagged, I'll be made aware of, and I can revisit the chart and see if I want to participate in that one. The euro isolated is bullish. China 50, not really looking at that. Pound Kiwi, CAD Swiss, Aussie dollar. We already know that. And then USD CAD and USD CHF are bearish. US oil is also bearish as well. So let's go over those three last ones: oil, dollar CAD, dollar Swiss, and then we'll look at pound basket to see if I really want to participate in that or not, because that could be like 3 trades that I take. So we'll see. So let's go to oil first. Oil here is just in this playground of 85 and 65. So we're still within here. I think anywhere within this level here is okay, right? If we get above here, above like 87, above 90, and we start kind of floating back up, that's problematic. At that point, I'm probably going back into euro dollar shorts and going long the dollar. But for now, we're playing around within here. That's okay. So these are the levels I have in mind. If you want to screenshot this, whatever. But this to me is like, okay, this is like tamed oil. Now and then as far as trading oil too, do I want to take a stab at it to the long side? Maybe not. Do I want to short it? Maybe not either, because the war is still unresolved, right? So taking a short position on oil could be very risky, because all it takes is just one flash of something going wrong, something hitting the fan, and all of a sudden you have a 7+% week in oil, 8% in oil, just chugging higher. So not looking to short that one by any means. So with this one, I'm just monitoring it just to see how it affects other pairs and other asset classes. Now, when it comes to USD CAD, I'll just look at USD CHF first. USD CHF, I really like still. I did take a loss on this. So this one was a loser for me earlier, was it last month? But I will say this technical level is holding up quite nicely here, right? This is a very solid level. It's very obvious too, right? We're kind of just hanging out here. What I like about this though is that the fundamental picture is starting to weakened for the US dollar. So we had, your round of inflation figures last month, and then you had NFP came in weaker than expected on top of a previously weaker NFP. So you have a lot of things kind of pointing at dollar bearishness. So if this week you were to continue to see that CPI print come in cooler than expected, you see some softness in the dollar, and you start to see this chart here change meaningfully, then taking a short position on dollar Swiss would be very nice. But right now it is just kind of just chopping around here. But I will say this technical level of resistance here looks quite nice. So as long as we are within this level or below, I like it. So I think this one could be one of those things that just develops over time. But right now it is hanging on for dear life. But again, things are starting to shift now, especially after Friday. For the dollar outlook. So if you see this thing start to roll over, think about this, right? You would be hypothetically shorting at a level of premium relevant to recent price action. Like this is a low over here, right? So if you think about your risk to reward, right? If you were to short right here with stops above structure somewhere up here, but you have potential to target the 200-day right here or 0.78 or even below, like that is a really, really strong risk to reward ratio. So again, you're starting to see the fundamentals paint the picture. Now I just need, similar to Aussie Kiwi, I need to see the technicals start to break down for me to really like this pair. Also, 2 edge finders giving us a very bearish reading, right? So that's awesome as well. So that's my thoughts on Aussie or dollar Swiss. Dollar CAD. Dollar CAD, well, the Canadian numbers have actually been improving slightly here in recent times. So you're starting to see that on top of, again, weakening US fundamentals. That's what's bringing dollar CAD lower here. So with this one, I'm not really looking to short it. I'm not. Like I mentioned earlier, I'm a dip buyer at the 200-day moving average. So we'll see what happens here, right? If we continue to see dollar CAD slide lower, remember, I told you guys, what am I going to do if for some reason the fundamental picture starts to change in favor of the US dollar? Like I need to be prepared for that. Dollar CAD would be one of those trades, right? So to the long side here, you're getting let's look at this. You had a very strong one directional push higher. And now you're having a cool off in that. So if you were to tap into this level right here or right here, the golden zone is that 200-day moving average right in between the 50 and the 61.8. So the more dollar CAD goes lower, the more I like it, and the more I'm ready to pull the trigger if in the event you start to see dollar bullishness, whether it be hotter inflation, whether it be the war in the Middle East picking up and you start to see yields in oil higher. All of those things, right, could cause me to go ahead and go bullish on dollar CAD. And so it's currently, below or in between the 38.2 and the 50, but ideally I want to be in between the 50 and the 61.8. So I'm looking for that one. That one is a trade that I'm willing to take too. If I have to flip flop, you guys know what I mean, flip flop. So if I have to flip flop, I'll be expressing it via dollar CAD. Also, too, like this level too, like this level right here, this was resistance at one point, turned into support, basically. So we'll see what happens. We'll see what happens with dollar CAD. Is a nice one, I would say. What else do we have? I think we covered everything. Let's go to the pound basket, and then we should be done with it all. So let's go to pound dollar, you guys. So pound dollar, you have overhead resistance here. So if we just get here immediately, I'll be cautious. But if you get a pullback, then you still have room to kind of catch to the resistance level. So not the best risk reward. Pound Swiss. What is it doing? Pound Swiss is getting a very bullish rating as well. But this is a chart that's moving along its way. So there's really no pullback opportunity here. I'm going to update this level, make this support. Yeah, so with Pound Swiss, it is doing its thing. So there's really nothing I can do. Unless somehow you get a pullback into here. But the train has left the station, guys. So Pound Swiss, have to just watch it. What else do we have? Pound CAD. Come on, you got to give me something here. Pound CAD, okay. Looks interesting. Pull back into, let me clean this up here. This is a choppy chart. Pound CAD, where are you? What does this look like? That could be okay. I kind of like that. Just put an alert right here. All right, Pound CAD. I'm looking at it at 1.875. So if you get a pullback into this level right here, pullback and it holds, I'll take it to the long side. And then risk to reward perspective, let's see if it makes sense. So I see this obvious 200-day moving average. So I quickly just off the bat want to put my stop below the 200-day. But what does that mean for my risk to reward though? Let's see. Because the stop needs to be where the stop needs to be. All right. You don't want to like force a trade if it doesn't work, it doesn't work. So the stop needs to be where it needs to be. That's about 200 pips away, 210 pips away. And target is 300 pips away. I'll take it. I'll take a 1-to-1 all day. I like 1-to-1s. So this will be a good one. Stop below at around 211, 220 pips, and then take profit at 300 pips away. That's okay. So I like Pound CAD. So I'm going to keep that there. And I'm going to keep this too as well. So I'm going to keep the hypothetical trade 230 and we'll do 1.9 to make it easy. It's a 1-to-1. I'll take that. Okay, let's see what else is on the list for pound. Pound yen. Not looking to do that. If it's yen related, I'm going to stay out the way for that one. Pound kiwi. Let's look at pound kiwi real quick. See what we're working with. Pound kiwi to the bullish side. I remember this one. We're below the 200. We're kind of breaking down a little bit too. Kind of tricky. Let me see if I can clean this chart up a little bit. I don't know if I want to be risky with this one though. Let's see. This is hard to read. So I'm gonna go to a daily chart and just see if I can find some clean lines. So I see this here. I see this here, I see. Do you see what I see? Let's see. Is that a good? No, that's not a good level. Let's see. Okay, this looks a little bit cleaner. So now I'm going to go to candlestick chart and see where we're at here. Okay, that looks a lot better here. So pound Kiwi, kind of range bound right here. I will say though, so given that this is the most recent low, then let's measure this move out here too. So long position hypothetical. Let's say we do it right here, market order, and then you would put your stop below structure here. Your take profit would be here. This is another 1-to-1. So if we were to somewhat find our way to the lower end of this range here, then I would be better off to take this trade. The reason being, and why I want to be more kind of strategic and wait for the bigger pullback, is because we're below the 200-day. So that's why I say that. So if we were to get, let me put an alert here on the charts for you guys. Alerts right here. Boom, boom. And if we get there, then I'll take pound Kiwi to the long side. You also have that GDP number for UK this week as well. And it's getting a bullish reading on the edge finder. So I'll take that all day long. So I'm going to be waiting for that one. And that pretty much covers it all. Top down, potential trade ideas. I really like dollar CAD too. Dollar CAD looks really interesting to me. So we'll see. And it's good to be prepared, right? In case something happens, in case the macro story shifts a little bit in favor of the dollar, you have a contender that you can act on. And you're not having to guess or act on the fly there. All right, let's see the chat here. Let's see. Ball, it says, would be funny if today indices fall off a cliff with paying no attention. That could be the risk. You can get a flash sell off of everything. So we'll see. But I will say dollar yen higher today. So maybe not today. Well, it says, do you guys track your best and worst day? Mine are Wednesday and Thursday. Okay. And then Sluggy says he loves trading on a Friday. I don't really track like the best days or worst days. I could see if you're like a swing trader, if you're like an intraday trader, if you're like active every single day, and you're very specific as far as like the sessions go and stuff like that, then I could see like tracking what day is good for you and what day you would rather stay away from. But me personally, it could be any day where I execute a trade. It could be on a Monday, it could be on a Thursday, it could be on a Friday even. I mean, usually not Friday, but it really doesn't. My data set would be very small, I would say, or very wonky. And if you look at pound euro from previous high to swing low, if you draw at fib, rejecting a weekly. Pound euro, you mean euro pound? Is pound euro a thing? Oh, pound euro is a thing. Let's see. So you're saying if you look at pound euro from previous high to swing low, if you draw a fib, it's rejecting the 50 from high to low. I don't know, man. Let's go to euro pound. I think that's the chart you were looking at. Euro pound. And you do from. That's what I think you meant. That makes a lot more sense. Okay. From the high to low, you're rejecting this level right here. So you tapped into the 50% retracement level, and you could continue lower. That could actually work. I will say, the question becomes which one's stronger, the euro or the pound. Edgefinder had a really strong reading on this. Let's go to neutrals and let's see what it looks like. Euro pound. It's neutral right now. That makes it interesting. I do like it though. I do like it, and I did tell myself that I wanted to wait for a revisit right here. So this level right here is very, very strong level of support. Like this was support for a while. You can see here. We finally broke. So I was looking for a retest of this level once again, like support turn resistance type thing, and then trade it lower. You can see that my alert right there, the white dotted line is right there. But this could also be something interesting. So we're rejecting the 50. So we had a one directional push lower. I think that's what you're saying here, Kier. One directional push lower, and you had a pullback here. And we're kind of stalling out at the 50. So that could be interesting. The only thing is the edge finder score is neutral right now. And at one point, it was getting very bearish. But this is what I will say. Let's say that come what day will it be, on Wednesday or Thursday? Come Thursday, GDP in the UK comes out really strong. I will jump in this trade. Like I would jump in, assuming that the edge finder is going to update that information. I would jump in this trade to the short side and then write it lower. I like that trade a lot, actually. I do. And you have nothing else going on for Europe or the UK. It's just that. So we'll see what happens there. But this is a really strong trade. I like this idea too from a technical perspective. But I just need the edge finder to tell me, give me the green light. What is this? BOJ September rate hike signal led to U.S. joint intervention. That within itself caused a little bit of a spike, but dollar yen's not really doing anything, I would say. Yeah, it's still green on the day. What is that? A little flash right there? Come on, that's nothing. Okay, cool. So my portion of the segment here is done for today, guys. I'll be back again a second time today. I'm going to pass the show over to Nick here shortly. So thank you guys so much for watching, and I will see you guys in just a short while.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Hope you're doing well. Happy Monday to you. Was just listening into Alan's segment. Great stuff here to start out the day. We'll see if anything happens with that dollar yen action. The yen volatility continues to be an interesting side of the FX world. We've so far been holding the 200-day moving average on dollar yen, which is very interesting. We had the shoot below it. Price came back in. Now still kind of holding on to that 200-day moving average. So we'll continue to monitor that. Yields are higher here for the U.S. and for Japan. So yields continue to be an ongoing theme of this market. You have to remember it is still a challenging dynamic. When we came into this market or came into this year expecting to see several interest rate cuts from the United States, and have flipped now to completely the opposite, talking about possible rate hikes this year. Now, I'm kind of in the camp of thinking that rate hikes are very limited, if not, maybe not going to happen. We could take a look at some data on that just to see kind of what the basis is for interest rate hikes or cuts. Right now, if we're looking at this from a fundamentals perspective, we have, for example, higher inflation, but it came in softer than expected, like 3.5% inflation versus 3.8% expected. We've got the CPI report this week. That's going to be a big statistic that I think a lot of people will be looking at. And look at this, guys. We have all of our dates added. Man, that looks great. I hadn't even noticed this. We just finished getting all of our columns added here. The developer must have finished that, which looks great. So we have got now here not only the actual versus forecast versus surprise, but we've also shown here the last reported date for each of these statistics. So what you can see here, and this is going to be our next phase, the next thing I'm going to do with this, the CPI report, you can see that the last time we got a number out was July 14th. We're going to make this color coded so that when something is older, it is more obvious than something that is newer. So that new addition will be really cool, because what that will mean is like, okay, you pull up Edge Finder, you're looking at US dollar. If you see, for example, non-farm payroll, that's a fresh print, right? That's a very fresh print. We'll color code that. That's the next phase of this. We'll color code it so that you can tell just by visually looking at this data points that are more fresh versus more stale. Kind of just slowly making the product better. That is the goal every single day. Anyways, so yes, we have inflation data coming this week. You can see it's been approximately a month. Here comes the new data. We'll be getting both the CPI and the PPI numbers this week, which will give us an insight into inflation. Now, again, inflation last time around was really good for the market, not for the dollar. Dollar doesn't like soft inflation, but for the market just in general, Bitcoin, gold, stocks, etc., they liked the softer than expected print. So the pressure is on, because now you're looking at this and it's a month later and it's like, okay, well, now what's happening with inflation? Is inflation going to sharply rise? And I'm just curious in terms of where we're at this week. What do we have for forecasts? Also, this headline here, BOJ September rate hike signal led us to join in the intervention. Very interesting. Led U.S. to join in intervention. Very interesting. Anyways, so we have on Wednesday, that's when you're going to get the CPI print, 3.4% expected. So year over year is expected to actually drop to 3.4%. So of course, that has a lot of potential impact on markets. If you get, for example, a 3.6 or a 3.7 or 3.2, those sorts of scenarios could drive the dollar higher or lower, depending on how that data falls. So we'll see. Inflation will definitely be center stage this week for me personally. The stock market has been, recovering very well overall, and so you also have gold here going to very much be anticipating or trying to figure out what's happening with these inflation prints. If we get cooler inflation, another round of cooler than expected inflation, let's say you get a 3.3% print for CPI. If that happens, I think that there's legs to this gold rally and that we could see a squeeze on up to 4,500 and beyond. So I do think that if you get, as long as you don't get red hot inflation on both, generally speaking, I think you have room for gold to continue to rise. When it comes to where I'm interested in setups, I am looking at a pullback into the 4,200 level as a possible zone where I'm looking for gold longs. I am also watching for, if you do get no pullbacks this week, let's just say CPI and PPI are cooler than expected. If you get this rip to the upside here today, tomorrow, this whole week, then I start looking at 43.40, where we're currently sitting as a new level of potential support. But I do generally think gold is probably moving higher. But again, the contingency here is that if you get CPI and PPI and they come in way higher, right? If we get higher than expected prints, let's say 3.7% for CPI or something like that, and PPI, what's our number there? What's our what's our forecast? We can look at that later. But let's just say, again, for reference, we have our forecasted data versus our actual data. Let's just say this week the actual data is way more hot, right? That is super, super bearish for gold in the short term, because that could reinvigorate the idea that the Federal Reserve is going to hike rates or potentially hike rates. So I think all eyes are on inflation this week. Really going to be important. Isn't PPI more forward-looking? Sluggy, that's a good question. Yes and no. Consumer price index, I would argue, is still really important because you have the consumer, or you have the producer level, the wholesale prices further up the supply chain. They're doing their thing. Then that price gets passed on to ultimately the distributors and all the ways that it shows up on our shelves, right? Well, companies making the decisions, intermediately between when it gets to the shelf versus, up the production chain, they're really ultimately the ones that choose to or not to pass that on to the consumer, right? If they feel they can, they will. If they feel they cannot, they may not, right? So, or they may simply be forced to. If there's enough input costs and they have to maintain profit margins, they may just have to pass on costs to consumers. But sometimes they don't have to, and sometimes they choose not to. So the both are very important. It also tells you if they think, for example, that prices are short term going up faster, but longer term may normalize, they may choose not to pass on those costs and just short term kind of keep prices stable. So there's a lot that goes into it. Inflation is a very tricky thing to try and measure. It's a very tricky thing to try and predict. And it has a lot of input costs, or a lot of inputs that can drive what happens with, the ultimate consumer prices that we pay. If CPI comes out hot, that stagflationary environment won't be good for equities. Jobs is bad. Now, if inflation is hot, oh man. Yeah, Yoshi, that's a good observation this morning, because I think that if I'm looking at stocks, one of the more tricky concepts for me right now is that you do have the jobs market coming in softer than expected on multiple fronts. We can see that here. Impact to S&P 500, JOLTS, ADP, non-farm payroll, 3 key job statistics that we got. You can see August 5th, August 4th, August 7th. Like last week was jobs week. We had fresh data across the list, and most of it was not particularly upbeat for the jobs market. Meanwhile, if we are looking at economic growth, GDP growth, missed expectations, services PMIs, consumer confidence, these metrics also were a little soft overall. So I'm definitely with you in terms of the growth side being a little bit problematic. If you tag in there higher than expected inflation, then this number is going to get uglier. Now, I don't know. I'm not making a prediction of what inflation is going to be this week. I try not to do that because I don't know. But if it does come in higher than expected, then I do think that your concerns about stagflationary worries would spike. I do think you'd hear that word get thrown around. If you had a big uptick in inflation, jobs data slowing, economic growth less than expected, yeah, that's an environment where gold can be interesting. Gold can do really well in a stagflationary environment. And it can be confusing because you're like, well, I thought inflation going up, not great for gold. Well, inflation going up when the economy is stable is really bad for gold, because then the Fed can be like, hike those rates. Let's get that, let's keep things under control. And just hiking interest rates in general is bad for gold. Like almost always, it is a negative for gold. It strengthens the dollar, or at least that's the attempt. However, lowering interest rates is also almost always good for gold. It's more money printing. So gold has kind of been an interesting spot because it's rounded out. It's found some support here. I do generally still think that there is upside for gold, but a stagflationary environment is not too bad for gold, because now what you're looking at is, okay, you have gold. Yes, inflation could mean keeping interest rates elevated, but if the jobs market is softening, someone pointed this out to me, or not to me, but I saw it. I saw it on social media, and I stuck to me, which was the Fed cut interest rates last time that the jobs market went this rough. Let me show you. So if I can go to my economic data, labor market data, and let's go to the monthly jobs report number and see if we can take a closer look here. So let me see how far, when did the Fed, do we have more data here? Let's see. Yes, we do. Okay. So the Fed cut interest rates when inflation had not reached the 2% target. Whenever the jobs data starts to come in really soft, the Fed can say, okay, we need to lower interest rates. We need to. My concept is I don't necessarily think the Fed's going to rush to cut rates right now, but I think that they may rush to not hike rates. They may rush from, hey, we might need to hike, to, we're going to keep things unchanged, because the jobs market is showing some weakness. And that weakness, if you get some negative prints, that will freak out the Fed. And I think that will keep them from hiking rates. So that makes me a little bit more leaning on the bullish side of gold. So we'll see. So Nick, in theory, CPI would either way be a positive for gold. Sluggy, that's an interesting concept too. Yes and no. I still think that if you get a really hot CPI print this week, it's bad for gold. It's not good for gold. Because let's also remind ourselves that one data point doesn't make a trend, right? So we did have a round of jobs data. We had a round of jobs data reported here in August that were not great, reflecting for July. But it doesn't mean that the jobs market is just dead and destroyed. You really should not make that conclusion, because there's been times, as we just got done discussing the data here, like you've had times where you had really poor jobs data and then it bounces back, right? Really poor jobs data bounces back. What would be more concerning, and has been kind of concerning, is the gradual slowdown in the jobs market. If it were to spike lower and then spike lower, that would be really concerning. And then I would say, yeah, no matter what the inflation number comes out, gold is still going to be bullish, because the jobs market is taking so much of the attention of the Fed. We're not quite there. Like right now, inflation is still the key metric I think that the Fed is focused on. But yeah, if you get a couple more data points like that, and that's why I think gold's already moving higher. Gold's like, oh, that's a jobs market that's showing a little wobbliness. If that keeps wobbling, it's not a word, but you see what I'm saying. If it keeps getting worse, that could be a serious bull factor for gold. So yeah, my thought process is one data point does not necessarily make a trend, but this is arguably two where we've had a soft jobs print versus expectations. And so I do think it's fair to be looking at gold and saying, okay, Edgefinder's got a screaming signal on gold right now. It's been really spot on. I'm not in the trade because I've been waiting for pullbacks, but the concept has been there. July 23rd, Edgefinder went bullish on gold. That is, July 23rd is right here. So on this day, things flipped to a bullish category, primarily due to fundamentals. And so we can see gold has been ripping higher here. And I do think that there is more room. I like the idea of pullbacks on gold. I've been looking at, as I mentioned, the 4,200 level and or a breakout of the 4,350 level, let's call it. I do think 4,500, 4,750. Like, I think that these levels could be coming back into play. It's a three-way seesaw: growth, inflation, employment, to see how gold and any other asset behaves. You got it. Exactly. Economic growth, inflation, jobs market, monitoring all three simultaneously is really critical. And I would throw in there, adding in crowd sentiment, institutional activity, and a little bit of seasonality. That's kind of the Edgefinder is a conglomerate. It takes a look at a lot of stuff to build a view, so that ideally we're not blindsided by something we're not paying attention to. If you're somebody who's only watching the latest report, please don't do that. That's a bad way of trying to approach fundamental analysis. If you want to be a macro trader, if you want to understand how does inflation, jobs, economic growth, do not try and do that off the top of your head. At the very least, if you are not going to buy Edgefinder, totally fine. Do something to monitor all of it at once. You can do it manually in a spreadsheet. That is what I did for a while, and that became mind-numbingly a lot of work, a lot of time to do that. That's why we built the tool that you see here. It's an automation. So it's pulling all this information, building a report, And, we've been building this thing for the last 5 years. By the way, if you want to try it out, we've been rebuilding. We have a completely new way to try Edge Finder. Give me a second. Let me grab the link because I've got to add it here. I don't have it handy, but I'm going to grab it for you guys. Edge Finder trial. There we go. Okay. If you guys are interested in trying Edge Finder, we just added a bunch of new ways to do so. We have a free access option. We have a 30-day trial option. We have a course that comes with it. So if you are interested in checking out Edge Finder, like I said, we just launched several new ways to try it out, to explore the tool. We have an interactive tour on our website. We have a course available that is completely free. So if you are somebody who's like, yeah, I'd be curious, it's like no strings attached. You can just check it out. So there it is. Link is in the chat to explore all those various options. But again, if you're like, I want to take my macro to the next level, straight up, you need tools. Like you cannot do fundamental analysis off the top of your head. At what point does too much data become too much? It's a good question. I would argue that the purpose of Edge Finder is to focus on the data that the Fed, if you're wondering, well, where'd you get these? Which metrics did you deem worthwhile? We focus on the Fed. These metrics are things that the Federal Reserve frequently mention, frequently use to make their decisions. The Fed is the ultimate money printer. If you want to know what markets are going to do, where money is flowing, pay attention to the Fed. Pay attention to central banks. Nick, I've been asking a question. Is the API you need to get all this data expensive? We spend a lot of money on data. Yes, there's a lot of overhead costs to, all the different tools and resources and automations and stuff. So yes. Well, and more so, the real cost, worth every penny, is the developer time, the support staff, bug fixes, monitoring the data. But it's a business, right? Like we sell access to the tool. That is how the tool is funded. Yeah. Price is everything. Balla, if price is everything, you might be in the wrong live stream, man. Like this is a fundamental analysis focused show. We recruit exclusively, well, not exclusively, we have a couple technical only people, but primarily fundamentalists here. I would argue that price is certainly a valuable input, but it's not the only thing for me. And again, to each their own. Some people are pure technical people, especially if you're like a day trader, if you're like super short term and stuff. Price is no dispute. Price is awesome. But to me, my big thought is like, okay, if I'm looking at markets, price is the most universally accessible and understood thing. Like anyone can pull up a candlestick chart. Nowadays, it's completely free. There's amazing charting software, every indicator under the sun available to the average trader. And while price is still, again, I'm not discrediting that it's useful, I think that there's stuff that you miss in only looking at price. If nothing else, price with indicators that study what happens in price, like for example, seasonality, this is ultimately still quote unquote price, but we're studying price behaviors through some calculations, right? Like we can look at what price is doing on average during certain times of the year. This is just pure, simple statistics, mathematics on what's going on with the price of a particular asset, right? So this is still price. It's just mapped out. It's visualized, it's calculated, etc. Or for example, what about sentiment? Sentiment and positioning is huge. Price does not always tell you that. So if I'm looking at price only, and I know it's perfectly fine to have different thoughts in markets. I'm just sharing my reason for why, price action is king is certainly not enough for me to just go, ignore all the other really powerful stuff that's out there. Like for example, options data. Options data is arguably, in my opinion, the best way to gauge market sentiment and positioning. It's an incredible way to gauge fear and greed. It's an incredible way to gauge how much pent up energy is in a chart. The issue with price is that while you could add volume, which is not just price, if you add volume, that's another way of looking at things. If you add options, that's another way of looking at, it's pretty much like volume, but the options volume. These things add more detail. They add more context to what's happening. So right now, the way to read this is the S&P 500. There's a massive amount of call volume going off right now. Crowd sentiment has gotten super bullish. Like S&P 500 here, you can see, I would personally be a little hesitant on S&P 500. Now, my personal strategy, I like to break, from a price action perspective, I like to break and retest for entry opportunities. But if I'm looking at this thing, I'm thinking, okay, crowd sentiment is like really overwhelmingly bullish. I may not be able to get that just by looking at the candlesticks. So now I can see, all right, if I'm looking on overall, call volume is heavily outweighing put volume. If I go take a look at net options volume, I can then take a look at it here, look at that. It's high, but it's not as high as over here, right? So I can really get a lot of context from going beyond just candlesticks. But I understand, to each their own, but there's many styles. The thing that I've told this story a million times. The reason I ever went into macro fundamentals is because years and years and years ago, I got tired of running around YouTube and seeing a bunch of people who were like, price action only strategy that makes me $1 million out, like all those nonsense things that I think we can all agree of. Like there's a lot of nonsense. There's a lot of garbage out there. And I realized, okay, well, who do I want to actually mimic? Who do I want to replicate? Who's actually making money doing this stuff? And so I started listening to interviews, and I've told this story many times, so bear with me. Listen to interviews, listen to people who had so much success that people had parked money with them, hedge fund managers, money managers, the pros of this business, the people who make the most money doing this stuff, professional traders and investors that manage massive client funds. And guess what they spend 90% of their time talking about? 3 letters, 1 word, Fed. They talk about the Fed. They also talk about business cycles. They talk about current themes, like, for example, AI or data center build outs, or the demand for industrial stocks, because data center build outs are going to be a multi-year continuous spending. I don't think that stuff is useless, and I don't think we should ignore that. That's the stuff that matters. Yes, Bala in no way is being targeted here, guys. He is an Edgefinder user. He's a member of our community. I would actually largely agree that we also shouldn't swing completely against price. Some people go so far with fundamentals that they don't care what price action's doing. I'm not there. I think it's an input. I would say it's 1/4 of the puzzle for me. For other people, price might be half the puzzle. For other people, might be 100%. To each their own. There's many ways to reach trading success. I'm just telling you that from my experience, I kind of kept looking for what works for me, and I found, okay, the pros are talking about fundamental analysis. They're talking about what the Fed cares about. So when we went on this campaign of building a tool, I was like, we're going to focus this tool on what the Fed cares about, because they're the ones that move the market. They're the ones that, if they rate hike, if they cut rates, the whole markets, they all shut up and they all listen. The Fed is what matters, right? So if I'm thinking Fed, if I can get any insight, if I can build any sort of report card to help me better monitor what the Fed may be thinking right now, what is that worth? And to me, it's priceless. To me, that is my entire core. What I have circled on the screen right now is the core to my understanding of finding great trades in markets. Doesn't mean I win every trade. I'm certainly wrong in a lot of ideas that I have, but that's why I focus on what the Fed cares about. That's Edgefinder's root cause is, what does the Fed care about? Well, actually, really, what do professional institutional traders and investors care about? They care about the Fed. What does the Fed care about? Okay, the Fed cares about these metrics. This is their rubric. This is their scorecard. So we built a tool that helps us to monitor that. That is the long story, not short. about how Edgefinder came to be. So yes. Yeah. Appreciate you, ball out. Macros is defending driver for sure. Nobody says useless. Yeah, no, it's now you may very well. Here's another point of view. You may understand macros matter. Actually, I can tell you this factually. We have a ton of customers, a ton of Edgefinder users who are like, I don't actually really know all that much about macro fundamentals. I know that they are a driver. I know that they matter. I want context, but it's not like TraderNick's, core mechanic to behind what everything he does in trading. That's not for me, but I still want to know what's going on. I still want to see the macro. Give me that bird's eye view. Nick and team, they're the specialists on building macro scanners. It's not everything to me, but I still want to know. I still want to know the drivers. I want to understand it, right? We have a lot of customers who they're like, I would actually explain that a lot of our customers who use Edgefinder, they already have a strategy. They have their assets they trade. They trade gold or they trade Forex or they trade something. They just want to add in fundamental confirmation with the help of Edgefinder. And that honestly might be our biggest customer base and where most of our traders are at. They're like, I'm not a fundamental everything trader, but I want the tools that you have to just cross-check my own analysis. So anyways, I'm sorry, I ranted on that. I promise that was not meant to be a sales pitch, but it absolutely is the reason that we are in business. That's why we have traders using our stuff. Long story short, this week I am looking at gold pullbacks, looking for longs there, looking for, let's see, anything else? Silver is also intriguing to me. Oil, I'm kind of cautious on. I don't know that I have enough to short oil, although Edgefinder is giving me a little bit of a bearish lean on this one. Dollar, I'm a little bit more on the bearish side as well. If I take a look at DXY, if you're a dollar bear, I'm looking for some kind of breakdown in price here. Or I think if you're a dollar bear, the other side would be a rally up into 100.5. I would generally think could get faded more likely than continue. So 100.5 looks like an attractive short side entry in my view on the dollar. The other one would be a breakthrough the 99.5 level, that sort of area, 99 to 99.5. That could get interesting. Right now, I think the dollar's sort of consolidating right here. So I would, like I said, I'd like to see that sort of setup or that sort of setup this week. I'd like a little bit of movement one way or the other. Preferably, I wouldn't mind the retracement. I would not mind that at all. 100.5. And then I'm probably looking along euro dollar. Like that's probably where I would play this, I think. I've got a pretty clean chart here. Downward structure broke to the upside. Pull back into this right here looks really sweet. So honestly, give me a little dollar strength for a couple of days. That'd be great. Risk reward concept is garbage mainly. Yeah, I think people obsess over like, should I have a great high win rate or a great risk reward? The answer is it doesn't matter. Find what you like and what is profitable in your system. I typically go for a lower win rate, and I do typically let winners run. But I don't target a specific risk reward. I don't go for like 3-to-1 or 2-to-1. I go for trailing stops. So there are times most of my trades are 1-to-1 or I lose, a couple in a row. Every once in a while, I'll catch an 8-to-1 or a 5-to-1 or a 10-to-1. I never know. And I kind of like that about my strategy. I like not knowing how far my trades could potentially run. Like, let's just say I get long euro dollar, and let's just say on currencies, I have a little bit more of a defined target, but let's just say I'm looking at, gold. Let's just daydream because this would be really nice. If price came down, I got long, and let's say it rips and it rips and it rips and it rips, and I just keep trailing my stop. I like that aspect of my strategy of saying, here's my stop. I keep trailing it. I keep trailing it. I keep trailing it. I keep trailing it. I don't know how far it's going to go. I like that. I like not knowing and just saying, I'm going to let the market tell me when I'm out, when it's time to get out. Anyways, guys, we've got Alan Perez. He is back for round 2. Let me drop that link one more time here. Try Edge Finder. Try it. Here we have several new ways to try out Edge Finder. We have a couple different options available. If you are thinking about, hey, I want to implement macros. Hey, I want to implement the software that you guys work on to help monitor economic growth, inflation, jobs. Try it. Takes 2 seconds to fill out this form, and we will email you all of your various options. And if you fill out that, you'll immediately get a free access to our course material on how to use fundamental analysis in your trading, even if you never buy Edge Finder. So there you go. With that said, I'm going to back out of here and throw the show back over to Alan Perez. He is back for another 30 minutes. Stay tuned. He will be back on right after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, how you guys doing? I love this comment that I saw. Where was it? The show is not your show without a rant. It shows that you're passionate about things that matter. Dude, the rants are like the funnest parts, I would say, of the live stream. You know, when we get dialed in here, that makes it so fun, and just time flies. And yeah, man, the hot topics are very, very interesting. I'm sure you guys agree. Where's the coffee? I don't have it in my hand. I don't have it, man. I need to make it after. No, I didn't have coffee, man. I didn't. I don't know why I didn't get it, man. I was busy. I was doing something else, like work focused. But yeah, no coffee in hand. But I do have water, and I would say that our water is very effective at waking you up. Like if you wake up and just get yourself like how big is this water? I don't even know. A water this size of cold water, down it, you'll wake up real quick, just as good as coffee. But yes, I do need to have my coffee, but I haven't had it yet. But I'm feeling pretty energized, so I'm all right. I am missing the flip-flop beans, though, I will say. Let's see. You guys are funny. Water in the morning is a bit disgusting. What are you talking about? What? You ever had, like, when you're thirsty and you have cold water, you take that first sip, it just feels crisp, like a crisp hit of water. Yeah, man, water is good. Water is really good. Yeah, you're tripping, ball out. Thoughts on Aussie dollar? Aussie dollar, it's kind of in the middle. So here's my thoughts where I take this immediately. Aussie versus the Kiwi, they're very related. They're very similar. The Kiwi is stronger, I would say, than the Aussie fundamentally. From a technical perspective, I don't like this right here. So Aussie is right smack dab in the middle of two very key important levels. And so like the risk for reward, if you were to go long or short, depending on who you ask, it's going to be still ugly, right? Because you have to put your stop below structure, assuming you're a swing trader like myself. And so the risk reward is not the best. So I kind of don't like Aussie dollar. Someone asked about dollar CAD. What are my thoughts on dollar CAD? I like dollar CAD. I think that you have a potential here to take this to the long side if the fundamentals start to shift in favor of the dollar. You are at key levels right now. So you have this level of support, which was resistance before here and here. So you're at this level testing it once again. You also are in line with some key Fibonacci retracement levels. So if you just go from low to high, you are in between the 38.2 and the 50. And currently, you are still above the 200-day moving average, which could act as dynamic support. So I actually really like dollar CAD. Like if I were to have to flip bullish dollar CAD would be the way I express it all day long, right? Especially like this. Like let's do this. Let's go hypothetical. We just enter market order right here, and you have to put your stop below the structure, which would be, in my personal case, would be below that 200-day moving average. If you target, let's say, this range again, right? Like this was resistance here. You can see that we tagged it here, rejected it. We broke here, tagged it, rejected it to the downside. So if we were to tag this level here, that is, how far is that? 187 pips. So it's like, it's not a 2-to-1 by any means. It's like a 1.5-to-1. Okay. But then if you increase your horizon to maybe over here, the recent high, it becomes a 2-to-1. And then the cool thing about this one is depending on how long that theme is lived, the dollar kind of strength theme, then you can, really target like levels up to here. So I like dollar CAD for a flip-flop trade. That's what we're going to call it. When we're in a position where when we're correlated in one direction, whether it be dollar long or dollar short, and you have to take the opposite one, we're going to call that the flip-flop trade. So my flip-flop trade would be dollar CAD. Let's see what else you guys got going on. You guys are starting to get active here, so I have to catch up. After a long night, yes, you're right. After any night, man, you got to have some water in your system. There's nothing better than cold water early morning. I love that. Cold water, man, in the morning. Cold shower, man. That'll definitely get you. Thoughts on USD JPY? I'm long on it. Well, if you're long USD JPY, fantastic. You're doing great, depending on where you bought it at. So with me, I wanted to be a buyer of USD JPY if we got to 155 again, or even 153. Ultimately, I wanted to be a buyer of dips and capture the appreciation and plus the positive swaps. So depending on where you bought USD JPY, you could be in a really strong position. My only concern or my only question would be really like any interventions, right? But like if you bought this chart right, like if you bought USD JPY right around here, then if you were to get an intervention, fine, you could see it happening, and then you can get taken out for break even or for a small loss if you have some slippage, whatever the case may be. But if you bought USD JPY wrong, let's say you're chasing right here at the 200-day, well, any intervention could really do some damage to you. So it depends, right? Like any chart or anything that you buy, you have to buy it right. With USD JPY, I'm definitely, in the longer term, kind of positioned to the upside, not position, but wanting to go to the upside. So with that, you have to buy it right. And for me, buying it right will be anywhere at 155 or below. So that's my thoughts on USD JPY. Cold sparkling water is better in the morning. You guys want to know a fun fact about me? I don't know if I should say this on live stream, actually, because you guys might troll. If I say this and I open this door, you guys will troll me forever. So I don't know if I want to say this. Should I say it or no? I don't know. All right. So sparkling water. My problem with anything carbonated is that I don't know how to burp, or I didn't know how to burp. Like, I don't know what happened. Like, my mom or dad just never taught me or whatever. Or I don't know if you're taught this. Are you guys taught how to burp? Anyway, I have a really hard time letting it out. So like if I get like inflated, man, and then it just comes out all at once and it sounds like one big throw up, but I'm not throwing up. I'm just releasing air. So do I just fart? No, it just comes out of my mouth. Like it's like one big bleh, but it's like straight up air, nothing crazy. But yeah, that's been my dilemma. So I don't like sparkling water. Now I've gotten better. My fiance has trained me better. She's been helping me overcome this, and I can take sips here and there. But yeah, man, anything sparkling related is horrible. Anything carbonated is horrible. So cold sparkling water in the morning, that would be bad for me, man. It would be horrendous. But yeah, I also can't burp. Oh, awesome, Michael, dude, you're my best friend now, dude. Heck yeah, you can't burp either. That's good. Marco, how you doing, man?
I'm doing well. I'm laughing in the background
because no one teaches it. See, I wouldn't know because I couldn't do it. My perception was that like you're born or you're taught with it, But
yeah, maybe you have like a natural thing where you can't burp.
it's really hard, man. It's really hard.
So how are you doing today?
Pretty good, man. Pretty good. I was earlier in the stream, I was trying to figure out what my flip-flop trade would be. So currently I'm positioned dollar short. I think
Yep.
that the macro supports that, but in the events that you were to get some hot CPI prints coming out, what would I, look for as far as, capturing that? And so I came down to the conclusion that I like dollar CAD, probably the best. From a technical perspective, the pullback into this level here looks quite well. You have the 200 as dynamic support. There's a lot of things for it. So I like dollar CAD to the long side. That will probably be the only trade that I take if you were to get some kind of dollar bullishness with the CPI. I like the pound too, but it's already overextended. Not the pound, I'm sorry, the euro dollar. But I would need to see maybe like a rejection of the 200-day moving average first before I go short side. So dollar CAD to me is my favorite one.
Yeah, I did read that the U.S. Government sold a lot of euro holdings. Apparently, they have some FX reserves, and they sold some euro recently. So that's why the reaction of euro dollar has been kind of muted to the upside when you compare it to like other pairs, like I don't know, USD CAD moving down, or sorry, not USD CAD, but some of the other pairs where the dollar lost value. So that could be a thing that's kind of keeping the euro a bit more flat. But
yeah, for sure.
Yeah, so for now you're basically selling the dollar and you're buying gold.
Yeah, same old thing. Nothing has changed really. Euro dollar, we're getting closer to that profit level, so we'll hold on to that one. It's at break even, so if it tags me out, it's fine. Gold I've trailed into profit a little bit more, so we'll see. I'm looking for another break retest continue for me to just move this trailing stop to like over here or over here, but it's kind of where I'm at right now.
Yep.
Sorry, Marco. The chat's getting funny. They're saying Meta Marco. If gold crosses 45, I have to have sparkling water on stream. Things are getting weird. Yeah.
Ballout, are you still in France? Was Ballout in France, or was that the joke?
Maybe.
I remember something from the chat and someone saying that Ballout is in France. But yeah, so maybe if gold does go back to all-time highs, we can have you drink like a gallon of sparkling water here on stream. I think that would be appropriate for all-time highs. And we would for sure get a bunch of viewers, just because of gold being at all-time highs. I think the chat would go absolutely crazy with gold bulls. But yeah, this week we have the CPI. We had the NFP last week on Friday. That came out much weaker than expected. Actually, it was pretty good for the dollar bear story. How I'm seeing the situation, let me just show you something on my screen.
Sure.
Let's go to add to stage. So if you look at the Forex factory calendar, we can see that the forecast for the CPI print, the year-on-year is 3.4%, while the poly market odds are actually even lower at 3.3%, and the volume for this is 500,000. So this is a pretty reliable signal, and poly market tends to be more accurate than Bloomberg and Reuters. So essentially, I'm betting on an even cooler print than expected. 3.3, that could happen. So selling the dollar before the event, or in my opinion, buying Aussie dollar before Wednesday could be a good position. So that's kind of what I'm waiting to do. We have the RBA. Yeah, we have the RBA tomorrow, so I don't want to go in before the RBA. I would rather wait for the RBA, see if they are maybe even more hawkish, which would even help this position. So if everything aligns after the RBA, buying Aussie dollar, I think it's a good position.
And I wonder what Trueflation says. I don't have the subscription, so I don't know what it says, but I'm curious to see if there's some divergence there from the public kind of Forex factory figure to like Trueflation. They're very good at what they do. I should probably buy it, honestly. But also, Marco, I wanted to show this. What you said makes me happy there as far as a potential continuation of the dollar bears. But here's what I saw that was interesting to me that I wasn't really expecting at all. So this kind of goes against what we're thinking here. So it seems like we're kind of on the same page as far as like cooler CPI would be good, bearish dollar, whatever, right? But
Yep.
the market is kind of taking a different stance, I would say. So on Friday, you had essentially rate hold for the entire of 2026. And then you had one rate hike. And then you hold from there. That was CME Fed Watch on Friday. Now it's starting to look different, where you have, again, still the probability shifting to one rate hike in 2026 and then another one in 2027. So it seems like all of the rate cut optimism has been scaled back coming into Monday. So that is like, what does the market know that I don't know? Yields are higher today. The 2 years higher today. The 10 is higher today. Gold is higher today, so maybe that's what it is, right? Maybe it's a combination of yields and oil higher that's picking this higher. But ideally, I kind of want to go with your positioning here and say that inflation is going to cool down, at least stay flat, I would say.
Yeah. I love that the market is pricing in hikes. I think it is the best opportunity, one of the best opportunities we're going to get this year, because I think the chance of the Fed actually hiking rates is lower than 5%. Like if you were actually watching the Fed meeting last time, I drank a couple of beers, so I wasn't really, let's say, on point with judgment. But I would say, by the way, don't drink a beer and then trade, because it's not going to end well. But even with a couple of beers, he was super dovish, like the event was super dovish. He didn't want to signal a possible hike in the future. He didn't want to even comment on inflation being elevated. He was just like dovish, completely dovish. And looking at the Fed and what they did in the past and how dovish they were in the past, and the last time they hiked, I think inflation was at 7%. Currently it's 3 point something. So like 3% is the new 2%, right? 3.8% inflation is not a big problem in the eyes of the Fed. They don't feel obligated to hike rates. That's why I think the greatest trade of this year, alongside of the yen intervention, will be fading the hawkish Fed pricing. So essentially being dovish for September, being dovish for October, and probably for December as well.
And anything that would help this. Well, one thing I like, before I get into that, is that I like to see this. Like, as of now, my positioning hasn't changed. Like, I'm willing to flip flop if we go into hawkish mode and we start to see some hot figures, sure. But this right here, I like to see. Like, the more that this gets extreme, better for me, because I'm kind of betting that they're wrong and that we have just neutral. And so the more right we get on this, the more repricing needs to be done to get back to this.
Yep.
Right.
Yep.
And that's where the kind of opportunity
That's the
lives.
Trade. Yep.
And then as far as oil goes, what are your thoughts on that, Marco? Like, we've now, I don't know if this was a real source or not. I saw had to have been X, where you have essentially a possibility of US just pulling out of the US Iran situation and just kind of like surrendering and be like, look, this is no longer part of our issue. Like, what are your thoughts on not that specifically, but kind of a kind of holistic view on like what's going on with Trader Hormuz stuff? Like, do you think anything has really changed, or same old? If it's same old, then the risk to the upside in oil still is a thing, and then that could really disrupt the dollar bear story, the fading the Fed story.
I read a couple of very interesting points that the advantage for Iran is the highest now, but a month ahead or 2 months ahead or 3 months ahead, their advantage goes down and down and down, because all of the neighboring countries are going to start building the alternative routes. And in, let's say, 3 to 4 years, the Strait of Hormuz will no longer be a thing, because all of the oil will be going through different routes because of all of this that happened now. So essentially, the highest negotiating power that Iran has is probably right now. If they don't do some sort of a deal and reopen the strait, I think they sort of lose the advantage as months go by. What does that mean for the markets? What does that mean for Trump? What does that mean for the midterms? That's a completely different question. But as far as I see it, all of the rumors about Trump pulling out of Iran are still rumors. I think that would be a massive sort of loss for him, even though he would present it as a massive win. I still think that his ego would suffer a lot from that decision. So I think we just stay like we are doing now. So oil being elevated, but not severely elevated. Like, if you think about it, I think that's also the most logical outcome. So oil stays at, let's say, 80, 90, something like that. We get 2 to 3 years, and then all of the pipelines, all of the alternative routes are built, and then we kind of trickle back lower to 70, 65, something like that. And the economy would survive. So the economy would be able to cushion oil being at 80, 90. It wouldn't be such a huge problem.
And then too, in the background, while you have these pipelines being built and all that, and by the way, I don't know if you saw that Scott Bessent, when he was like, like 75% of what's being routed through the Strait of Hormuz, 75% of that in 2-3 years from now, it's going to be through pipelines. Strait of Hormuz is going to be just another body of water. That's what he said, basically.
Yep.
But in the meantime, as you're having those pipelines being built, you now have like Saudi outside of OPEC. Right now, they can produce and kind of help cushion that a little bit there. So, I said this early in the stream. I think that oil just kind of hangs out here within this range, and then anything above, let's say 90, 92, and we creeping up here is problematic, of course. But that's kind of, I'm under the same thought process too. But we'll see what happens. I think that. Well, I don't know, man. I don't know. I don't even know if I can say this, but I was gonna say, like, I think with the midterms coming up, that you would have some sort of clarity coming up soon. But even then, I kind of don't think so.
Looks like we're not gonna get much, because the preparations for the midterms should start 3 months ahead, and it's already August. So I think we would have saw some positive developments already. I think also, like, I don't think Iran wants to do a deal, and I don't think US wants to. Yeah, I don't think US wants to take an L, because if they want to end this thing, they just need to like drop everything, go back home, and that's still a huge loss, and that could do even more damage to the midterms than just staying or keeping the situation as it is. So it's a very tough thing to think about. But I would say just it stays like it is right now. And oil in the last 30 years hasn't really went up much. Inflation has been going up massively. Oil, not so much. If you like zoom out on a monthly chart on US oil, I think you will see that we are trending up on the very, very long term, but not. We're back kind of near the 2008 levels. Is that true?
2008, you saw, 2008 is right over here, but then you had this big drop here. But we'll see. Marco, aside from my USD CAD long position that I'm looking to trade, if things flip, if things don't flip, then I just hold on to what I'm doing now. That's kind of the only thing I have really that I'm willing to act on. How about yourself? Is there anything that you're seeing in the market that you kind of want to participate in, or are you kind of like on the sideline a little bit? What's your thoughts there, or any trade ideas that you may have?
That's a good question. And my main goal at the moment is to develop a view on the dollar. Once I have that, I can trade around it. And so far, it's a bearish one. So I'm looking to buy Aussie dollar after the RBA meeting tomorrow. And I would love to get in gold. If we can get a bit of a pullback, a bit of a correction, I think gold would be a good buy. And also, if I buy gold, I can make 10 videos about it, and Instagram will be on fire. So that's an added bonus.
That's an added bonus for sure.
That's an added bonus. No, just kidding. If I'm going to buy gold, it's going to be because I really want to buy it. And pullbacks, I think, are a good play here. Plus, Edgefinder is bullish. On Aussie dollar. So you're getting a bunch of confluences, which I really, really like. One thing that is a bit of a problem, the next Fed meeting is pretty far out, 16th of September. That is more than a month ahead. So a lot can happen in the span of 4 weeks. A lot of things that can ruin my position, meaning take me out. If I can do an options trade, that would be much better, because then I can just not have a stop loss. But on prop firms, that's pretty much impossible. So I'm going to have to structure it with clear levels and a clear stop loss.
Now on gold, Marco, let's say that hypothetically you were to get a hot CPI print, strong dollar, weaker gold, and you get some kind of a retracement. Are you still looking to buy gold in that event, or or is that enough to kind of disrupt the trade idea?
I think that the main thing pushing this trade idea of a weaker dollar is the dovish Fed, because I think the market is very much relying on the Fed, not because of what they're doing with rates, but just because the market loves to react on the meeting. The meeting really causes a lot of volatility and repricing. So just betting on a dovish Fed, if the Fed watch tool is pricing in 40% chance of a hike at the next meeting, that still shows me that there is room in the market to push the dollar down as we go into the meeting and as the meeting turns out dovish. If the opposite thing happens, I have the stop loss, of course, to bring me out. But I think that's the next high probability trade to do. And if the CPI prints hot, yes, you would get a pullback on gold, which could be exactly what I need to fade it. Yeah, to fade it. Yeah, basically
fade the Fed. Yeah,
to get a better price. Yep.
Awesome. Well, I love that, Marco. And I'm going to go ahead and pivot out here. So great stuff talking to you. I'm kind of in the same camp though. Like if you were, let's say I get stopped out of gold because I'm trailed, I would be looking to kind of re-enter that too once you get kind of a recovery and stuff like that. I'm kind of on the same boat where like I think gold now is starting to wake up a little bit. The trend is clearly shifting away. Like we've been stuck in this range here, and so we're no longer stuck in that range. And so I think that this could be the beginning of just a maybe not a 2025 2026 gold where you have something like this, definitely not, but a grind higher, you know. And then you have the 200 here. If you overcome that, then you just have open room to grind higher slowly. But yeah, seems like we're pretty aligned on that front.
Absolutely. You know, I'm not calling for a home run. I'm not calling for all-time highs, which I don't think are going to happen. Like we had a historical run on gold in 25. 99% chance that you're not going to get the exact same run in the next decade. Just you can backtest it. It's not going to happen. There's a 99% chance it's not going to happen. So on gold, I think 4,700, 4,800 is my target, and then I'm out. Then I'll be very happy to take profit and just go flat, because I think the rally is limited. So although I think gold is bullish, I think the rally is limited, and I'm probably not going to be using a trailing stop loss, but a fixed take profit on this one.
Awesome. Yeah, me too, man. Yeah. I'm kind of looking at 4,500. That's kind of where I'm looking to see some kind of a stall out, and then from there, you know, take profit, reevaluate the situation. If it makes sense, it makes sense. If not, cool, take it and leave it.
If it makes sense, it makes dollars. Is that the
Ben Mala?
Yeah, I have his quotes running in my head like 24/7. So it's pretty funny. But anyway, thank you. Yeah, he's so cool. And by the way, if you guys love Ben Mala, he did a new podcast recently on the Iced Coffee podcast with Ben Graham or Stephen Graham or what's the name?
Graham Stephan.
Yeah.
And his sidekick.
And the sidekick. And the sidekick. So if you want to watch that, it's very fun and very insightful as well. There's a lot of good stuff in it. But thank you, Alan. I'm looking forward to tomorrow, and good luck with your positions.
All right, Marco. Thank you, man. Take it easy. Bye-bye.
Thank you. Bye-bye. Okay, so let me finish up my segment. Give me just 1 second. Let's put up the... Okay, awesome. So, pull up the Hormuz traffic. The market, unfortunately, can just stay in this range for years unless we do open the straight. Yeah, if I pull up the traffic, the IMF port watch, and if we go back, can we do all? Damn. So, so this is basically how many ships are passing through the Strait of Hormuz. You can see it was like 50, 60, 70 ships. That was the average. Even in 2020, ships were passing through. That's crazy. And now it's near zero. We opened up in June a bit, and then it's back to zero. It's the same with the volume. So with the transit trade volume, same thing. Maybe 2020 will be... No, actually 2020 was fine. Interesting. But you can see recent times near zero. We can stay like this for a long time. I think we can definitely stay like this for a long time. Personally, I know there's a lot of scare stories about oil producers and oil analysts saying that the SPR, the reserves are running out, that it will be the Armageddon, that it'll be the end of the world. I don't think it's going to happen. Like, capitalism has a way of solving things without causing a massive issue, a massive disruption to trade. So alternative routes, you know, they're going to build them. Next 2 to 3 years, they're going to build them. And US and Iran, I don't think they can make a deal. I think we get a prolonged conflict. I think the US, if Trump backs out, he ends up looking like the P word and loses, or his ego suffers. If he stays in and escalates, could create problems as well. And this bad position of blockading Iran, kind of drying them out economically, although it doesn't seem to be working, is something that probably he can tell to the press. So this current situation does seem to be the one that it's going to continue in the next few months at least. I think by the end of 2026, we're going to get the same thing. Which basically means... It basically means that oil will stay elevated, inflation will go up a bit, but it will probably stay... It'll probably stay below the level where the Fed will actually hike rates. Because if we just quick back test, so Fed interest rate, trading economics, can we go 10 years? Let's see when the last hiking cycle started. February 28, 2022. Okay. And if we go to the CPI, we go back... Let's do 5 years. So, okay, the latest number is from October. Let me just see. US CPI year on year. Let's see if I can get more data. Okay. So, February 28, 22. Or you can say March 22. That's when the first hike started. March 22... Inflation was 8.5, or let's say previous one, 7.9%. And those guys decided to hike. So inflation was running way above 5% for months before they actually decided to hike rates. That's why I think we just keep getting a dovish Fed, which in my opinion is great because I know exactly how to trade it. And it's not that hard. You just go, you sell the dollar and you go risk on either during the meeting or after the meeting, or going into the meeting. You can even do it if you can get a good price. So I do like that. And I think that is going to be the trade. Marco, is the correlation between USD/JPY and GBP/JPY sufficient for long term? I don't know. I didn't do the analysis. What you can do is you can download the data from TradingView. You can download the tick data. You can import it into Excel, and you can run formulas to see what is the correlation. So I don't have the numbers, but you can very easily acquire the numbers. Or even easier, you can download the tick data from, I don't know, maybe TradingView has it, but maybe some other site for the last 10 years. You put the data into Claude and you ask Claude, what is the correlation? So Claude will calculate the correlation automatically and spit out a correlation number. So make sure you run that if you want to see the raw data. That is the only thing that's actually going to help you. I can come in and say that yes, there's correlation, or no, there's not a correlation, but I'm talking out of my butt because I don't have the numbers. What do you see for gold pre-CPI? Well, I don't really care about pre-CPI and gold. I just want to see a pullback. I don't know if it's gonna happen, but if we do get a pullback, I'm gonna be a buyer. I'll be pretty happy to go in on a buy setup. So that's my game plan. I think CPI comes out cooler than expected because of the poly market. Poly market US inflation annual expires August 12th. $500,000 in volume. What's the spread? Always check the spread. Open this up. So what's the... Come on. Okay, I'm gonna let it load. Why is it not loading though? Spread is 1 cent. That's good. That's accurate. That means the price is, you can really get a good sense of what the price is. So current winner is actually lower than expected inflation, lower than the previous number, and lower than the actual forecast from Bloomberg or Reuters. So that is the trade. Recently we have a flip. Yes, we had a flip. Okay, we had a flip recently. You can see the historical movement, right? Historical movement right here. Anyway, let me mention the sponsor of today's show. So if you're looking to get funded, do check out Ola Prime. So Ola Prime, you can get 20% off with A1 Live. Now, the reason why we recommend Ola Prime is, first, if you're a swing trader, there's no consistency rule on some account types. That's a big one. Okay, if you're a swing trader, you know about this rule and freaking sucks. Ola Prime doesn't have it. Second, if you look at the Ola Prime Trustpilot, the score 4.5 out of 5, 3.2K reviews. Absolutely do read through the reviews. Check out the 5-star to 1-star ratio. And for this niche, which is the prop firm niche, these numbers are really, really good. Okay. So the reviews are good. And the third reason is we have a couple of traders in the A1 Discord who have gotten steady payouts from Ola Prime. They went back to us and said that the prop firm is good, that they had a good experience. And of course, that's the best evidence for us that Ola Prime is actually a good choice. So the link is in the comments. The link is also in the description of the live stream. And you can get 20% off with the code A1 Live. So you can get a really, really good price. I still have 3 more minutes, and then I think Tiger is gonna come to the show. I'm in Swiss yen. I'm holding a short position. I closed 60% for a really good chunk of profit. I'm letting 30% run. Aussie dollar, I'm looking for buy setups, but I do want to wait for the RBA, which is going to come out tomorrow at 6:30 my time. I also want to buy gold on pullbacks. The SPY did open. Let's take a look at the SPY. I wasn't in SpaceX. I closed it for plus 1.6. SPY kind of break even on the day. I'm trying to get into some individual stock picks. So we will see how that develops. RHI is not a bad stock to buy at the moment with the breakout. It kind of did continue, right? Let me take a look. Yeah, it looks fine. Let me just go to the 15-minute. Let's see. Yeah, doesn't look that bad. Anyway, I'm looking for breakouts on individual stocks. Some things are starting to form, starting to look pretty healthy. So I do like that. And we'll see what, oh, wow. LFST, big breakout. Stocks are doing great. If you're trading stocks, this is a great environment to, ETFs, to start going in, basically. You know, uptrend, all-time highs above the 50, the 20, the 10 EMA. EMAs are curving to the upside. We have broken out of the consolidation. Very, very good. The Qs are starting to recover. Let me see where is semiconductors? Okay, let's put those here. Semiconductors still haven't recovered, but yeah, semiconductors, they don't look as good. Why am I showing you the semiconductors, you may ask? Because the semis are what led the massive uptrend on the SPY and the Qs in April. Okay, so the semis are the sector that led this huge explosion up. You always need one sector to be the leader. You know, you need one that's going to perform really, really well and push everything up with it. So that's about it for my segment. Thank you very much for watching. I wish you good luck. You can catch me tomorrow. I'll be streaming every single day this week. And do not go anywhere because Tiger is coming on in 30 seconds. Thank you and goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Monday. Hope you're doing well out there. Just getting my calendar up here for the week. There we go. Guys, I hope you're doing well out there. As always, throw out your tickers. Let me know what you're looking at. Love to look at some levels for you guys. See if you have any questions on anything. It is Monday, therefore. Yep, pretty light day today for us guys here in the States. We do have the RBA statement coming out tonight. They are planning or forecasting anyway to remain the same at 4.35% on their cash rate. That'll be 11:30 my time here in Kansas City. So probably still be up for that. I'm stubborn about getting to bed early, so I'm sure I'll see that come in, and then I'll go to bed right after. Yeah, that's basically what I do. Seems like midnight anymore. 12:30 sometimes. That's when I get to sleep, and then I turn around and get up at 6. So got to get some more sleep, but hey, I'll be up for that. And then as far as the U.S. goes, though, we really don't have anything until Wednesday, where we start to have some more inflation data come in. So guys, for the month of July, we obviously had some pretty cooler numbers when it comes to the CPI, the PPI, the PCE. Those all were under forecast. And it gave us a really nice little bit of a breather after a couple of months of raising CPI and, starting to get some of the governors on the Fed a little bit antsy, especially Lisa Page. I know she was talking about it last week. One of the Fed board members there talking about the inflation getting pretty high, but I don't know. It was, and that was after we had our cooler readings. So I guess she's still just kind of looking at CPI overall versus the progress we made last week. So is one time of a drop a fluke? Will it turn into a trend starting this week? Well, we shall start to see on Wednesday, because again, that's the CPI and then the PPI to follow the next day. So that'll be the main ones, the main events we got going on this week, all about the inflation numbers. And yeah, that's, I guess, basically the main ones for the dollar. So anyway, flipping on over here to the Edge Finder. Let's get refreshed over here. Still got all the dollar pairs on there outside of dollar yen. It's still pretty well neutral when it comes to all the data. Obviously, you got the Bank of Japan and the Fed kind of teaming up to help prop up the yen over the last week. And we are still left with all the dollar assets outside of that dollar yen. So we'll definitely take a look at those. And then as far as the COT report, the yen got up and liked it. The smart money, the banks, the institutions increased their net change by 15.5%. So that's quite the spike for the yen. The dollar was right behind it at 7%, a little over 7%. And dollar is still net long pretty heavily over net long overall, 73%. The yen only 43%, but that was quite the change week to week on both numbers, the longs and the shorts. Added 46,000, we'll call it, long contracts. Got rid of 72,000 short contracts. Both bullish numbers. Add them together, quite the bullish result for the yen. So yen got scooped up quite nicely, dollar behind it, and gold as well. Basically pi, 3.14%. Okay, pi number there, 3.14% to the long side. And the biggest losers, was the Nikkei at 8.8% to the downside, along with the Nasdaq and the Russell as well. Biggest loser as far as the currencies, as far as the majors go, was Canada dollar, which makes sense because of the oil kind of depreciating somewhat. So anyway, guys, yeah, just let me know what you're looking at. Maxi says gold. RX Cobra says Aussie Kiwi. I think that one was first, right? Aussie Kiwi. Aussie Kiwi. Yeah, we'll do Aussie Kiwi, and then we'll look at gold and silver for you, Max. How's that sound? As far as Aussie Kiwi goes, pull that up over here on our chart. The trend is still pretty well down as far as I'm concerned. EMA's pointed down, lower lows, lower highs. I did draw a zone up a little higher right here on the 4-hour side. Leg out gave us a yellow candle. So that is where the institutional volume started to kind of peak in. And then again, it carried it down, pushed and broke and closed below this swing low structure. So I like that. I kind of like that structure. So just like I drew up right there with the projection line there, just basically looking for a retracement up to that zone. Now, EMAs are pointed down on the execution time frame as well for the 4-hour chart. So yeah, I would personally be interested right there at that 120.41 level. Now, more specifically, 120.5, because it looks like that's where I drew up a confluence on what time frame? I think that was a 2-hour. I believe that was a 2-hour. Yeah. Maybe that was 1 hour. Can't remember. Oh, I think that was the 15-minute actually. Was that really small time frame? I think it was. Yeah, that was the 15 minutes. So there you go. So this is the specific confluence point inside of the 4 hours at 12, is that 15-minute. I don't know if that's too small of a time frame or not, but what I like about it is the big, lovely red candle, guys. The VSA candle. That's what you call ultra high volume on that leg out candle on a 15-minute time frame. So definitely like that. What do we got over here on the edge finder though? Aussie Kiwi. Is it even on our list? Did it fall off? Aussie, yeah, looks like it did fall off the list. So hopefully that gives us some type of bearish strength, because that could be a possible spot right there to potentially look at a short, guys. As always, not financial advice, but if we get any type of bearish look on the top setups, might be interested in that. I'm not really interested in it at the moment, just mainly because of the data. It's just kind of mixed signals. So, but yeah, that's definitely what I'd be looking at, that 4 hour and that 15-minute confluence right there, 120.40 to 120.50 area for Aussie Kiwi. As far as gold and silver goes, still giving us some nice bullish looks over here on the edge finder. Very bullish, +8 for gold. Silver's a little bit behind at 6, +6. EMAs on gold still looking good. Now we did bounce into this supply, overhead supply, guys, and that was the one that I do believe that was a 1 hour. Go back over here in time. We ran into a call wall as well, so we got to keep that in mind. Yeah, 1 hour supply, put wall, which is that blue line there. Big strong drop, 2 big red expanded range candles and red bars. So do I really want to buy gold knowing that we just recently bounced into this zone? Not quite yet. I really need to see one of two things happen if I'm going to be looking for a long on gold. Number one is, since it's already hit that overhead supply, I would require that it retrace quite a ways down to that 41.67 level, the same one I was looking at last week. I did draw this zone up here, guys, and if you remember, that one included a very small 15-minute confluence in it as well, where I have that next gap, that next inefficiency, and that's too much of a disparity for my taste to go from a 4-hour all the way down to this 15-minute. Right? That's not obeying the rule of fours. See, that would be my 15-minute demand with my gap, but it's just too far away. I don't know. I don't know that I'm that interested in it. It looks okay on this 15-minute as far as your volume goes, but not on the higher time frames, which is what I personally require. Because if we go back to that 4-hour, it's the leg out is just an average green candle, right? So I don't think I'm that excited about it. Unless, well, actually, I'm not going to be excited about it either way. But obviously, I drew this. I would be interested if it just retraces all the way down. But obviously, to get another extra brownie point or two for me personally, let's get a break and close and then do it this way. That's what I'd be a little more interested in, because that would at least show me that these swing lows had the strength to break through that overhead supply. Now, it already broke through one. It broke through this supply right here, but that one was created with a green candle. So I don't know how much interest I put into the fact that we did break that structure. This is the one that I just showed you on a 1-hour chart that had a big red candle, a big red bar on the VSA. So let's break that, and that would probably increase my confidence in one of these zones working out down here. So that's gold. To me, this is a landmine right now because of that supply, guys. And it's already getting a little bit of trouble from it already, just waking in a few times on Friday. So that is gold. Need a retracement. Silver did start to bounce into this daily supply up here. Now that there's still a 4-hour supply higher up. So same thing. I would just want to see it break through that before a retracement down for possible buys. I think I still like gold a little better than silver so far because of that. Silver, remember, still didn't have that higher low. It had that lower low down here. And we're still technically within, well, no, never mind. I guess we did break this. I was going to say this was our bearish impulse move down, but we did finally break it. So that's just the challenge I see for silver, for the way I trade anyway, is the fact that we got yet another zone in the way. It's got to chew through it. Gold, on the other hand, it just looks a little better, guys. I just like the looks of it. Remember, on the daily, it had a higher low down here, and obviously a higher high now, breaking through all these structures here. Now that we have busted into the zone, I just want to see it break a little higher. That's all. So I still remain gold number 1, silver number 2 among the middles. But again, little bonus point if it can break and close anywhere up here first and then retrace. Okay, that would maybe open up this zone here. But if it doesn't, it just comes straight down like the yellow line suggests, this zone is out of play. And I'm going to wait for the deeper retracement. Okay, so that's kind of the way I look at gold and silver right now. But yeah, there's definitely no denying the strength of gold overall when we're just looking at the data over here. Yeah, so we'll see on Wednesday again how CPI kind of affects gold, how it affects the dollar and everything else. So just a little bit of work to be done on those. Let's see here. Pound Kiwi says from the ashes. Pound Kiwi, Euro pound as well. Yeah, so we'll have a look at them. Pound Kiwi. All right, so we got a +5 over here for that one. Euro pound. I think that one is still off our list, right? Yeah, so pound Kiwi, we do have a bullish reason to go have a look at it. So let's do that. Pound Kiwi. Pound Kiwi, pound Kiwi, pound Kiwi. And just before I get to that, let's go have a quick look at the surprise index so we can see where the pound and the Kiwi are. Pound's 50%. Kiwi is actually a little stronger fundamentally when it comes to, well, the data, just the hard data, guys. So not quite the look I want to see if I'm trying to short the Kiwi and buy the pound. But nevertheless, the math adds up to a +5. So let's have a look at it. So with this bullish signal we're getting, it's still in context of this recent drop. that we've seen ever since basically the start of July, since the dollar data started to go south. The pound has been dropping along with it. And understandably so, because the Kiwi data has been fairly strong, right? It's been fairly strong through here. The pound has been pretty well neutral. We had some structural breaks over here to the left, and the EMAs are pointed down. This is our 8 EMA, which is the dark red, pointed below the 21 EMA, pointing downwards. So until this whole structure flips around and starts breaking some of this overhead supply, some of these overhead structures, I'm not interested in this one either. It's going to have to, at minimum, break that supply zone. Preferably, if I could see it break a structural high or two, that would obviously help as well. But lower lows, lower highs, I just don't want. I don't feel comfortable trying to catch a falling knife right now. Not until it kind of proves itself, right? So remember, the top setups. This is always saying that these are favorable conditions to go line it up with a chart. But ultimately, the chart tells us the timing. It tells us when we can have permission to start looking at this. So if you're somebody that likes to catch falling knives, then, have at it. But definitely don't recommend that. I don't think anybody here on the channel would recommend that either. It's always good to get the candles on your side. The trend is your friend until the bend at the end. And so far, the trend is still, in my opinion, pointing down. So I would have no interest in buying pound Kiwi until it starts turning around, right? Break all this nonsense, and then maybe we can start playing some ball at that point. But until we do this move right here, this is totally off my radar. Does that make sense? Euro pound. We'll go ahead and look at that one for you as well, since you mentioned that. Same thing. It's still sideways. The moving averages are kind of closing up on itself. The alligator's shutting his mouth. Okay. It's not pointing to the heavens. It's not pointing straight down. It's just kind of sideways. Got an overhead supply to deal with. Yeah, I don't like Euro pound either. At the swing high of a curve. So it is, if anything, in a little bit of a premium territory. If we're just looking at swings, swing low, swing high, it's obviously up near the top. So too many mixed signals. The EMAs aren't helping out as well. So Euro pound, probably off my limit, off my spot. German 40, and then SpaceX, eh? Yeah, we can take a quick look at SpaceX. As far as the DO 40, well, there's no denying this thing's strong, isn't it? Higher highs, higher lows all over the place. You got your EMAs. This is the alligator's mouth pointing straight up, guys. That's the kind of trend I like to see if I'm trying to buy something. Okay. And this is just purely a technical look, because I do believe that one's, I don't think that's on our list, is it? Yeah. Pretty well neutral from the fundamental sentiment data combination. Trend, though, is arguably, probably one of the stronger ones we got. So, yeah, I mean, if I had a bullish reason, if this was on top setups as a bull case, this would obviously make this a lot better. But, I mean, we could go ahead and take a look real quick at a zone or two. Let's see here. Man, got a lot of gaps on this thing. Yeah, I don't know. I don't know about this one. I mean, there is a zone a little deeper down here. Of course, you got a gap underneath it that could be completely closed at some point. It's kind of a messy chart, to be honest with you. That is kind of a messy chart. I don't like it. I like the trend. I just don't like the way these zones are structured over here. I mean, yes, that is a zone. You got a lot of candles to the left. If I'm a bank or an institution, I'm trying to accumulate a position right here, perhaps a week and a half might be enough time to do that. What do you guys think? It's not like it was there for just one candle or one bar. It was there for all of these candles. That's probably a lot of time to be able to accumulate. So I don't know. I just don't know how much would be left, how much potential, buying orders would be left down here. But, at the end of the day, it did break a structure. And that's going to be probably around your 61.8. Go look. Yeah, 61.8. Okay. So if you're a fib trader, that zone is going right through that fib line, just below the 50 and kind of in the middle and all around the 61.8. So might be a spot, might be a possible spot for a deeper retracement, potential long. As far as SpaceX goes, I think I got that down here. SpaceX. We'll take just a quick look at that. Yeah, guys, It got a little retracement since its earnings call the other day, but it's still well underneath. Obviously, 135 is basically where this thing IPO'd. Trading View opened it at 150. We had that 3-day move up. Everybody thought this was going to be the unicorn, and then it crashed to earth. But yeah, like I said, after the earnings call the other day, it did get a pretty nice spike up, retrace, and now it's got a new spike. So I don't know. I don't know if this is the start of a new trend or not. We finally have enough data to get our 8 and 21 daily EMAs up here. And as you can see, it's been down, but it's trying to retrace to the upside. So I don't know. I don't really have a view on SpaceX. I don't know if that's I don't think that's going to yet be over here on the stock box. I think it's probably too early for that. I don't know. Nick, did you get that on here? No, it's not on there yet. Okay. I imagine at some point, guys, for those of you that have the stock box, I don't know. He might end up putting that on here. I would think so, just because it's obviously a largest company right now in the world. But yeah, it's just no play. As a joke, on IPO day over here, guys, as a joke, I did put a $50 limit order just for the hell of it on my Robinhood account. And I did it as a joke, but I don't know. It's starting to look more and more potentially realistic. Okay. I don't know. But that was just more of a joke. So we'll see if that kind of comes into fruition. That's about the best I got for you. It is obviously breaking some of these structures down here. So it very well could have another up move. I just would want to see at least a couple more days so that the 8 crosses the 21 EMA. That's exponential moving average. Okay. Showing a little more favoritism towards the most recent moves. So until it does that, I just wouldn't have any interest in it. All right. So that's that. What else we got? Ladies and gents, before I do forget, Nick does have the code for Ola Prime A1 Live. If you want to manually go to olaprime.com, find the account of your choice, pop in that code, and it'll give you that 20% discount. There's the QR code on the screen as well. If you are interested in that, really cool stuff over there. So as always, just go check that out. If you have any questions for me on that, feel free to go to at Trade Like a Tiger on X. That's where I'm the most active. I've got an account on all the socials, but that just so happens to be the one I watch the most when it comes to personal account. So yeah, feel free to chime in with a message and let me know that you're from A1, because I do got to tell you guys, I do get a lot of spam on there from fake accounts, and I can't tell whom is whom. So if you guys ever do reach out to me over there, just let me know, hey, I watch you on A1. Okay, just simple as that. That way I know you're a real person and not just a bot, because I do get that a lot. No Comfort, you're welcome. Absolutely welcome. What am I watching today, guys? What am I watching? Well, definitely those dollar assets. I mean, let's go through the majors real quick. Guys, feel free. I do have a few minutes left, so if you have any other specific tickers, just pop them in the chat there. So Aussie dollar, it's given a bullish signal. However, we are still chewing through this daily 4-hour supply. So I'm just going to have some patience with this one. Really prefer that it not only breaks the zones, but it breaks that swing high right here also. Okay. We're talking about the zones, the daily, the 4-hour confluence right here, but also the swing high. So I'd really, really, really like to see all that get broken and closed first. And then a retracement, because a little further down, we actually have a zone on top of a zone on a 1-hour time frame. All the way down here. Let's see. Where am I at? Yeah, here we go. Okay. I drew this one up this morning. So over here was that old daily zone. And then we had a 4-hour zone that we just barely missed. Just barely missed it. And then we turn around and created a new zone. All right. New zone. So that's a zone on top of a zone. That's a sign of strength. All right. All that is still within context of the daily. The daily that had gotten mitigated. So this is a potential couple spots. Zone there, zone there. I would just incorporate this whole thing into one stop loss. If I were to place a trade down here at the proximal line of the first zone, right? That right there would probably be where I'd put my stop loss. Just go ahead. I don't want to put it just underneath that zone because I'm inside of another zone. So I want to incorporate all that I want to add a little more care to it. Got a swing low over here as well that could potentially come into fruition. So that would be my look, and just look at those zones as one zone, basically. Just combine the zones. But extra kudos points, extra bonus points if it breaks and closes first. Does that, it's game on. Euro dollar, giving a nice bullish score on the top setups as well. Now, we did bounce into that daily. Very similar, I think, to the Aussie dollar, right? Yeah, Aussie dollar, we're in the supply. Euro dollar, we're in the daily supply as well. So retracement clear down to the 114 area is still going to remain my favorite spot. We had that one zone a little higher up that already got touched. Or touched and mitigated. So I'm going to wait for a retracement, a bigger discount, guys, especially since we hit this overhead supply. A lot of potential orders up here that could push price down. And I think if I go to the 1 hour, I do believe if that's the same one I'm thinking of, I think this is the one that gave us a big red candle over here as well. Is that right? Or am I thinking of another asset? Let's go look. Yeah. Okay. Supply. 2 big expanded range red candles with 2 red bars for volume. That is effort matching result. That's why I'm afraid to buy anything in this area on Euro dollar or Aussie dollar or any of these 4 pairs, pound dollar, Kiwi dollar, because I think this is the same case for all of them. Big drops on volume. So that's effort matching result. That's what I would consider a true move. So until we break through that true move, just not interested in buying anything up in this area for sure. So yeah, going to definitely wait on that retracement down there. Pound dollar, Andrea's favorite. Similar situation, almost bounced in. It hasn't quite touched it yet. This overhead 4-hour supply. We hit the 4-hour zone last week, or I guess it would have been the week before, July 31st. But we did not yet touch the 1 hour. The 1 hour is the one I'm still waiting on, guys. 1 hour. Leg out candle is what color? Red. That's that's ultra high volume. Okay. That's what they call ultra high volume. Remember, green is average volume. Blue is below average volume. I don't want to buy a leg out. I don't want to buy a zone where the leg out is any of these 2 colors. That's just not a whole lot of activity. It's not a very good look. I need a yellow or a red, preferably a red. Those are obviously the strongest signals, and that's exactly what this 1 hour zone is giving me. Red bar, ultra high volume. Okay, yellow is above average relative to the last few candles. That's kind of how it's based. That's why the candle sizes are sometimes smaller, sometimes bigger, even with the same colors, because it's basically going off the most recent average activity. Right? Those spikes is what I care about. That tells me that that's likely smart money jumping into the system, jumping into that tree. So I really, really like that spot. I'm going to wait on it. Yes, the 4 hour was mitigated ahead, but I'm all about that red bar, guys. Even on a 4 hour, we're still getting a red bar. Okay, give me that 1 hour possible long on this 134 psychological level as well. Okay, so not financial advice as always. That's just what I'm watching. 50% of this kind of swing low, swing high as well. Okay, so that is pound dollar. And the final one where the dollar is the quote currency is the Kiwi dollar. Still got that triple bottom of liquidity down here. Up a little higher up, though, on a 2 hour. Got another zone created with a red candle. We got a lot of red candles this week, guys. A lot of red candles on our legs out. This is what I like to see. That doesn't happen all the time. Okay? It's not very, it's if we go through the past, you can see the red candles are far and few in between. There's one on July 2nd. There's one on June 2nd. Just looking at this asset as an example, June 5th, right? So sometimes you got to wait for weeks on this stuff. There you go, April 17th. And obviously, rates can do that. The rate decision day, the Fed day. NFP can do that at times as well, or just any major event. Obviously, the start of the strikes at the end of February, right? When we started jumping into the March, fighting over the Middle East. But I like that. It's higher on the curve, but again, that red candle kind of makes it a little easier to take a little more risk, a little higher on the curve. So I like it. I really like that spot, guys. That's Kiwi dollar. That's probably the closest one we have. All these swing lows, what's underneath them? Most likely, there's going to be some liquidity just hanging out down here. Right? All these swing low points right here, stop losses from these buyers that are attempting to push price up. Now, there's liquidity on the top side as well. Right? I could very easily draw the same thing up here. There's buy orders up here from these shorts that shorted and had to put their stop losses up in this area. Okay, buy orders and sell orders down here. So got a little bit of a case where you got some liquidity on both sides. All I'm asking it to do is come down to the demand zone. Oh, by the way, 200 EMA is pointing through that zone at the same time, same point. So that's that's probably going to be my favorite ones, guys. I know I'm out of time, but dollar CAD, it's got a similar deal. We did finally break through that daily supply. I'm sorry, daily demand, and we kind of created what you could call a little bit of a flip zone. A little bit of a flip zone. Now, there was a yellow candle on the leg out on the 2 hour. 1 hour does move to red, so it just depends on the time frame. Going to keep an eye on that 140.13 level, and then finally dollar Swiss, guys, and then I'll end it on this. Got a couple zones a little higher up, but I think the problem with this one was the fact that, yeah, the EMAs are still kind of sideways. So that's not a very clear trend to me. After having that big move up, alligator closed his mouth. It's just going sideways. So I think dollar Swiss is probably my least favorite of the dollar bearish assets, just mainly because of that. So give me any of them where the dollar is the quote currency. Otherwise, dollar CAD, that's probably going to literally those top 5 on my watch list, guys. That's what I'm personally watching the most. As of now, Wednesday, of course, we get some more inflation readings to see if we can turn that last month's cooler readings into a trend or if it was just a one-off. Okay. So with that, ladies and gents, you have a lovely day, and we'll run it back tomorrow, same time. Have a good one.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.